All right. Peace, power, and profit to the family. Peace, power, and profit. Let me get this mic right. So it don't seem like I'm chasing it. Seems I move it around a little bit and the volume goes up and down in levels. So let me get it, positioned here properly so we can go through our little commentary here and make the best of the information that we're going to share. And we'll get on off it here and let you guys get ready to conquer this market. Obviously, comes come Monday. Well, of course, we got the futures market for some of you guys who do operate within the future session coming up here shortly as well. Less than 3 hours to be exact. So that's going to be very revealing, given the fact that how the market closed last week, right? Well, Friday to be exact. But just the week in general, right? We saw a lot of you know a lot of weakness, right? A lot of weakness, right? And truth be told, of course, sometimes we do have that, that continuation, right? That coverage where markets begin to smell a little blood, right? Sniff a little blood, whatever. So we're going to be very cognizant of that as always, and we're not going to overstep our boundaries. We're going to stay within the confines of what we can uh you know account for there, therefore doing the most proper form of disciplinary analysis, so to speak, right? Because again, markets right now are definitely in uh a conflict of interest, right? We got people who feeling good about the new year, right? New year, new me, new stock, new opportunities. And then there's who rode this bandwagon quite successfully over the last couple of years, have reaped substantial great gains right across the board because the Feds were so accommodative in printing all this money. Now they're a little hesitant to kind of drink the Kool-Aid and just body dip on everything, right? That comes with a level of pause now, right? That Kool-Aid is getting a little tart. It's not as sweet as it was before, right? So of course, those are things that we have to look forward to for this year. Why? Because we know that punch bowl of Kool-Aid, quote unquote, is about to be somewhat spiked or removed altogether by the Federal Reserve, right? Those who created, right, the party, right, the unlimited money QE party, right, just pumping everything, and there's no end to to this delusional act of fiscal irresponsibility, right? As one would say, as a banker, right, these central bankers, it's their fiduciary responsibility to take care, the government, I should say weak spots, right? That of employment and natural disaster values of being able to kind of come to the aid of fiscal needs that the country may need when things arise. But in most cases, we're talking about these things are being financed by American taxpayers, right? Your tax dollars. It's not like this money was allocated in form of a congressional budget that's sitting on the sideline, then it goes to work, right? We know there's parts of that that's out there, like FEMA and many other things, but the Federal Reserve basically has a blank checkbook. Let that marinate for a moment. They have a blank checkbook, right? This is a digital money created, with the stroke of an enter button and some numbers implemented, right? Chasing hard, tangible assets potentially that do have value, and a lot of people seem to be fine with that, right? So of course those are things that we have to deal with, right? But not going into history lessons of the Feds, you guys know about this stuff, and if you don't, I definitely implore you to kind of follow along when we do talk about these things in general. But it's no secret at this point, right? The reason why we are in quote unquote an inflationary I should say inflationary conundrum, right? It's because the Federal Reserve has overreached their position on I guess the problems surrounding America's you know economy as a whole, the ideal of dealing with the COVID scenario, because they've made that a political football that's punted between Republicans and Democrats to the point where they just can't come together based upon consciousness of reality and science mixed together, and it's just a mess, right? We got Supreme Court holding a ruling this past Friday, excuse me, in conjunction to the Biden vaccine mandate. That's on the table. We may get a decision on that literally before you know the next 4 or 5 hours. If not, it'll carry into next week. But a lot of people expect we may get a decision from the Supreme Court on the vaccine mandate, by way of OSHA, sometimes before the weekend is up. So it's Sunday, right? So we coming down to the wire, unless there's something out and I missed it already. But there's a lot of things that's overhanging over the American economy as a whole. The consciousness of this country that's starting to be, really, rickety in a lot of ways, if there ever was before. Strong in that perspective. But again, a lot of things on the table to talk about, right? And one thing for sure, again, assets as a whole, those who own assets are still in the business of what? Shopping. There's many forms of ways that you can take the approach to investing in the markets, right? Regardless of all the doom and gloom that's out there. Of course, we've discussed these things before. There's rotations, right? That happens. People know how to move money around, right? The same way, you move money around when it comes to, paying bills and you want to do something great. Okay, well, let me see, do I need to, do this? People have ways to budgeting for what they want, right? Sometimes harder than what they need, right? It's crazy, but that's just the reality thing. So it's the same way when it comes to the stock market. And so we know that the inflationary hedge value that's out there, that those stocks are now starting to, show a little strength. And we're talking about the ones that are not overly valued, right? The overvalued plays now that are being, getting taken to the woodshed because they have, crazy high, price to earning ratios, price to earning ratios, where they're just being, value well into the future, to the point where, like, what else growth do they have, right? If they're not turning out the numbers organically, how can we continuously justify their valuations, right? Because we know they've all benefited off what? Cheap money. Hence, the thumbnail that I have on the screen, right? Low rates justify high valuations, right? Of course, that's Wall Street's narrative since Jerome Powell began to print money. And then on the flip side of that, rising rates, right, which we're now starting to move into rising rates, environment, right? Because there needs to be a wrangling end of all this inflation that's starting to kick everybody in the teeth, in Main Street to a degree, right? Price of gas up, food up, houses up, everything up. Rising rates won't hurt the stock market, right? So they can't have it both ways, right? That's the narrative that Wall Street and the CNBC pundits and those who, speak for these companies, who get paid for them through their advertisement and marketing funding, they dare not come out and tell the complete truth. So they have to pander to all this, pseudo data to make it seem as if everything is still fine, right? Well, guess what? You can't have it both ways. And at some point, when the market began to crash, then it's, guess what? Changed my mind. All right, then it's changed my mind. But here's the reality with the net. A lot of us already know this. We already knew this, and we already planning for this. And this is why channels like mine and many others who, speak that part of, hey, you need to have a little pause here. You need to, not be so, you know, you know, so jubilee about buying a dip and just everything, is still the same as it was last year, or stocks only go up, right? Stunks only go up. No, that's not the energy that we're going to profess. We never have professed that. We're going to be, cautious and careful and, meticulous and strategic and methodical, and prudent, and making good decisions in terms of where we should allocate capital. Why? Because we realize that, you know, as though markets seem to be Teflon done when we look back from a historical perspective, there are ebb and flows in markets. There are sine waves in markets, right? There are moments where you have to, take those things into consideration. Why? Because they matter. Why? Because again, if the game is to buy low, sell high, how can you continuously convince yourself that buying at these prices at this point, knowing that all this, uh, I don't know, negation of punch bowl money is being, it's about to be taken away? How can you feel comfortable still, going high dollar amounts at these valuations? When they're still, starting to build a little bit, a little blood in the streets, right? But some people argue back and say, well, that's just the nature of business, doing business, right? That's the part of the game, right? I still want to be invested, right? Well, guess what? There are also moments where you also can be a little bit more patient in that assessment and let all the fireworks around you work themselves out. Why? Because we do realize, again, the sine wave narrative, in terms of dealing with, golden ratios, pi, the whole ideal of, the 1/4, the 1/8, the 1/16 rule that applies in markets in terms of when we hit peak valuations or peak, pivots in markets. that you will have a pause of reassessment at some point, and so at that moment we need to realize that in the same breath, right? We need to stay within confines of things that we can account for, even though we know math in terms of markets does not really equate to it being an exact science in terms of markets, because emotions are are in effect here, causing a lot of the enigmatic values of markets, right? That anomaly is based upon how people deal with money, basically, right? Put that in layman terms, right? People feel some kind of way when they're dealing with money, right? So it will cause them to sell prematurely. It will cause them to buy prematurely, right? And or vice versa, right? So that's just the reality of this. So we want to make sure, again, we don't lose focus of that, because that's just a part of what make markets unique in terms of uh, anybody can participate who has the stomach, the intestinal fortitude, right, and the mental wherewithal, so to speak, to be able to deal with the volatility that comes along with it, right? But it would seem like that wasn't the case over the last 2 years. Why? Because we had training wheels on the market. Why? Because the Feds had the markets back, right? As the saying goes, don't fight the Fed, right? Why bet against the Feds at this point when they pumping billions and trillions of dollars into the market of taxpayers' money, mind you, taxpayers' money, with or without your consent. So yeah, we benefited like anybody else. So now it's the time where we start to say, hey, whoa, 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 let's pump the brakes a little bit, right? Let's be a little bit more cautious, and let's try to be, again, smart in our decision making. So with that being said, of course, those are some of the things that we want to discuss here with the family here today. As always, right, we do this little weekend, market mashup that that is, sometimes it helps to provide a little bit of understanding and content to what markers are signaling, and what you may need to look at going forward, right? So that's important. Now everybody has their own thesis, granted and give it, but I always say, when we come together like Voltron and form this coalition, a lot of things move across our mental wave in a way where we can use it, right? Actionable intel, one would say, right? So we hope that every time we go live, we provide that in some form of a fashion where you have that extra layer of actionable intel, right? Because again, we don't do echo chambers. We're not going to sit here and pump and preach a stock just because you're in it, right? We're just trying to stay comfortable knowing that this market, the market don't love nobody, right? We don't love them, right? Y'all know the song, right? Snoop Dogg back in the day, we don't love them, right? That's the market, right? Because the market will prove that to you every day, as we've made that very clear and conscious many times, right? Because at one moment you could be on top of the world, the next minute you could be backpedaling a little bit. Why? Because you overstayed your welcome, right? As the saying goes, bulls make money, bears make money, and pigs get slaughtered, right? So the pig is a person who just sits in positions, knowing that when there's a moment where they can take profit and bank some of those gains, who are thinking that the market is going to continuously fold into the way that or favor them in a way that they won't have to worry about risk mitigation, so to speak, and then they turn around and give all those gains back. Then it's like, okay, well, see, the market is rigged, this, that, and the third. Well, we don't understand how market moves, right? Because money moves market, and people do what? Add money and they take money away. So what happens in the moment of that cycle is what? You have ebb and flows, peak to trough, right? Some of them bigger than the usual, some of them a little smaller than the usual, but nonetheless, the game is to make money, right? The game is to uh, you know set in motion a methodical perspective, a thesis or whatever, and then try to capitalize off it based upon all the rules of engagement: fundamental, technical, investor sentiment, momentum values that happens along with one-off events, and you know again, that's just the nature of markets, right? So again, we're going to discuss that a little bit today. Again, some of the things that's very important in terms of just some things that are coming down the pipeline for next week, right? So as you see down in my description box, as I like to always provide some kind of level of educational content, I don't just have a dry description box, right? It's loaded with a lot of stuff, but it's to kind of give you something to peruse through when you come back and rewatch this later, or share this with your family member or your young kids that need to learn this, where they can kind of go through this and see some of the points that we're trying to distinguished of interest, right? So the top 5 things to watch in markets in the week ahead, right? So weekend market inflation analysis, right? So again, inflation, of course, is the genie that's out the bottle now and kicking everybody in the teeth. And on top of that, we're dealing with, you know, a lot of other things, right? We got the virus that's still out of control. Now we have the merging of virus. I'm pretty sure you guys heard that over the weekend. Now there's been a merging of the Delta and the Omicron virus, where they got a new one called Delta Omicron. Couldn't make this stuff up. Well, we still ain't even haven't dealt with the flu Rona, right? Where the flu is mixing with the coronavirus in Israel. And then on top of that, we have another virus that just came out recently too in Europe. I think it's 1BH1, H1, something like that. So yeah, the virus is mutating. It's growing legs. It's doing what it's going to do. And there's all these other things out there that the nations or the central bankers are trying to, I guess, persuade people by value of governments, because governments always want to set their agenda, right? The tone of what they feel like the patrons should be kind of following. No, everything is fine. The economy is great. We're growing at crazy numbers, right? The economy is great. People have, they're flush with cash. They got more money to spend. But that's the mind of a gluttonous person who feel like their lifestyle is more, relevant than yours in a lot of ways, because they don't understand what Main Street people really go through. So they like to talk, sit high and look low and make assessments over people's lives in a way where they think they know better than the average person. That's your average politician, to be exact, right? Moment of silence on that. So when you're picking your political game, right, whether you're a Democrat, whether you're a Republican, you need to realize that, look, they don't love you, right? As much as you think they possibly do. They may agree with some of your points, but they don't love you no more than, look, okay, play with it. So with that being said, again, we're going to jump right into it, because again, of course, I don't want to be on too long. Let me get the link as well so we can get the family in the building. We got the family already pouring in a little bit here. All right, happy to have y'all in the house as always. Ken, when y'all show up, I get smiles on my face because I realize, we got some warriors out there who love this stuff just as much as I do. And it kind of gets lonely when you don't have a lot of people to talk about the markets with, because not that they don't have the interest for it. They just feel like this kind of like, goes over their head a little bit sometimes, right? So you kind of feel like you're on the island to yourself with all this information. Like, man, what's about it? Y'all need somebody to help me, deal with this and talk about this and share this with. So maybe we can, a like minds can move in unison, right? So guys, know you got a place here, of course, where you can do just that. And we welcome anybody and everybody. Why? Because market does not care about who you are, where you've been, what you got, what you don't got, right? Race, color, creed, sex, gender, orientation, all that stuff is basically infinitesimal to the grand scheme of how markets really work, right? It's just about who can put, some good brain cells together and come up with a good plan of action, right? So we want to make sure we acknowledge that. And we welcome people to come on again, share their perspective, their market analysis, their stocks, their asset classes, their Forex, crypto, whatever. We welcome all that because it's all, it's all about trying to seek alpha, right? Get some gains out of this thing. So I'm excited for that. So with that being said, of course, like always, we'll let, a few more family may pop in. So we'll open up with some, like we always do, have a little fun. Let's, talk about, where we at in terms of the market, right? Because right now we've been on this whole thing about, markets. This is the moment where you have to put on your your Kobe Bryant or AIP to Kobe Bryant, your Michael Jordan sneakers, right? Your Vince Carter or your Reggie Miller, right? I'm going there now, right? So Ray Allen, right? Some of these Curry, right? Some of these clutch people who've been in the game, Larry Bird, Magic Johnson, going way back. Now I'm finna show my age, right? Michael Cooper, look, Robert Ory, right? Those clutch people, right? Because right now you need to be in your clutch bag. Right, you need to be digging deep and figuring out, how can you be clutch in a market that shows, that is showing weakness. So with that being said, let's roll some of that beautiful bean footage, how to be clutch, right?
The bar raising, we keep moving it up. Ain't no surprises here, they knew it was us. Apologies if I was doing too much, but I always came through in the clutch. I got faith restored, why you pushing the brakes? I ain't full of myself, boy, I'm full of mistakes. I came from humble and roots, I'm here to stand and deliver. Had no one gassing me up, except the man in the mirror. I used to work on my handles, and now it's handles of liquor. I write these songs in a dark room, the candle will flicker. I stay practicing heavy, for when the game's on the line. It's like over and over, I run the plays in my mind. I'm a psycho, I'm taking my time. Rushing perfection is a dangerous crime. You gotta give it and take it. That's what you do till you make it. I had to roll with the punches and take the hits from the flagrants. I'm saying fireplace to make a bunch of money, buy my mama a fireplace. We make incredible songs to celebrate and get mad lit. Once upon a time in Hollywood, I'm like Brad Pitt. My homies say I live a life, yeah, just a tad bit. Learning how to move in this rap shit. I told them that the bar raising, we keep moving it up. And no surprises here, they knew it was us. Apologies if I was doing too much, but I always came through in the clutch. A off game don't mean I'm losing my touch. And no excuses, I ain't using a crutch. Apologies if I was doing too much, but I always came through in the clutch.
All right. So again, clutch, right? This is the moment where you got to put your clutch shoes on, as they say, right? Get your clutch game on, right? So it's like pretty much how do you perform under pressure, right? Because that's what's important about moments like this. Why? Because you got to realize you have to learn how to adjust, right? You have to learn how to audible, right? Again, Peyton Manning, right? Omaha, right? So we are in our Omaha moment here in markets in a way where you now are having to, again, fish a little bit more harder, right? You have to change up your bait per se, maybe change up your location, quote, obviously, quote unquote, you want to move around from growth, overly leveraged growth stocks into more, value oriented oversold plays that may offer a great, bang for your buck. Why? Because money is rotating to those underprivileged plays, so to speak. Now, of course, these plays also do have to have a great business model, a potential value of cash flow, increase that, within their business model, so to speak, right? The use cases, we like to say, and a lot of it is going to be based upon the likeness of their dividend payouts as well, because we know that that's a great way to hedge when markets are starting to show weakness. People want to run to what they consider to be what they call, bankable money, right? You obviously can bank on a dividend that's already put in place through the company when you know that that mandate is already going down range, quote unquote. You just have to be in at that at that date, and then you can receive the payout. So of late we've been seeing that because I think AT&T was one of those plays that was just ripping because of its its dividend, whatever. So it's gonna pull back at some point, but we'll see. Right. But there's a lot of things going on in the market. So again, with that being said, we're going to discuss them. We got some family coming in the building here. So happy to have the crew in the house, right? We say the crew because we always show up to get it in, right? And the crew terminology of sports, we know that as being what? The row, right? The rowing crew, right? Like you watch the movie How High, they call them crew. So for us, I think we all on this rowboat together, kind of accurate these financial gains and markets, and just other business endeavors too. So I enjoy when I see the family come in the building. So with that being said, we're gonna open up the mic here, guys. It is the weekend. We can speak our speech and talk our talk, right? Do our thing. Happy to hear from you all and see how everything's going for y'all this weekend and what you may or may not be looking forward into the markets coming in next week. Before we get into our top 5 things of discussion. All right. So what's going on? We got Sister Monica in the building. Peace, power, and profit to you. I don't know if she's busy or not. She typically be working on the weekends, where she always working, but she also knows how to have fun too, right? Sister just came from the islands recently, again celebrating her birthday. So happy to have her here. Over Sunday in the building, over Angie in the building, over Ilba Angie in the building. Excuse me, correct, right? And over Chris in the building. So what's going on, Sister Monica? Peace, power, and profit to you today.
Hey, peace, power, and profit, everybody. Can you hear me?
Yeah, we can hear you. Yep,
hear you. Okay. I was trying to figure out how to get this thing. Okay, now I see the mute button. All right, yeah. So peace, power, and profit, everybody. I'm doing well. I've been in discussion with a few of my peers and how we're gonna plan some trades, what we want to trade. They looking in the software that creates software, I guess, for crypto, virtual currency, and things of that nature, and then war equip things that they use for war a lot. So we're looking at a lot of raw materials, so to speak, companies.
Very nice.
And trying to analyze. So pretty good. Pretty good, pretty good. So I'm working on. Yeah, I'm looking for
You
long term stuff though, and just a few
yeah.
long term option plays though.
Okay, some leaps, right? To think about some leaps potential
Yeah,
again.
yeah, because I'm finally starting to grasp the how to do the 1 hour chart. Looking at that chart and recognize patterns are um and understand my entering and when I want to exit and my patience. So I like it. I can do it better with long term. So I haven't really done anything day trade in a minute. And then also just preparing or reorganizing my um IRAs. And so I'm looking to do a business in IRA. So one of my new ventures is to do LLC, put it in the TD Ameritrade, and put in some ETFs in there. And so kind of doing it with some friends where we taking our change, money we spend and just the change, and we have
Spare
this
change
certain
investing.
dynamic of bank that we're gonna fill up, and then we're gonna take the
Mhm.
money and it's a little experiment, something new,
Well,
something different.
I go as far to say it's not even an experiment at this point.
Yeah.
Why? Because you realize, as we
Oh,
like, and we're gonna talk about that too, the power of the $5, right? Because we at the beginning of the year still,
right.
I still want people to get excited about this challenge, right? So that's my
Yeah.
challenge again, going in this year. We're gonna pick that back up again, the $5 challenge. So I would
Yeah.
say you're in the best position to do it now because
Yeah.
your
Um.
experience a little bit picking up.
Yeah. Yeah. I guess that's the wrong word to use. Yeah. So I'm
No,
changing it,
it's
but
good.
yeah.
It's good.
Yeah. Because some people who are kind of leery about investing, I'm gonna pick it up from my econ perspective and getting people to start their record keeping, but in the same sense, hey, you got to caretaker your life. This investment thing is the way you need to go. Some of you guys working too hard, these 2 or 3 jobs when you could really be
Mhm.
capitalizing on some of the funds that you kind of just giving away previously, like we talked about changing up. You know, if you eat out every day of the week, maybe once or twice a week, don't eat out. Take that $10, $20, in some people cases $30 and $40, and
Mhm.
invest it. See where it goes. So while we were in Mexico, it was like 12 of us and a bunch of our friends, and I was telling you guys that we was talking about our investments and where the money is at. That's the power of
Mhm.
having a circle of individuals who care about not just their future but yours as well. Of
Mhm.
okay, you get ready to start this new year. Don't watch me enjoy some of the fruits of the labor, but you can join me next time.
Join.
But this is what you have to do to be able to do that. So I started the day off listening to, because a lot of people concerned about the crypto, it being taxed, how it's being taxed and things of that nature. So I posted a couple
Mhm.
of those videos of some folks talking about that. So yeah, that's where I'm at. you know.
Making moves, and I'm loving it because again, that's that controlness of what of experience. Now being able to be in a position now where you can really sit through formulating a thesis without feeling intimidated by it. Why? Because
Yes.
again, experience is the best teacher. Of course it is, but also you don't this is not a moment in life where you're feeling like you have to guess your way through this a lot of ways. Why? Because you already been this minded inclined as it is. But for the most part, you realize how all this stuff works once you realize how to follow money, right?
Yes.
And
And
tracking money is not hard, even through innovation or devaluing of a moment when it's overpriced, right? Like, who wants to buy items at their peak pricing when you can get them cheaper down the road, same stuff. Make sense?
right.
So you just realizing that now, and how again, the rotation or rebalancing of a portfolio, again, when that happens, you're more you're more succinct with the idea of learning how to make that happen, right? And
Yeah.
so having a circle is great because why? It helps you guys politic all the variables better, right? Again,
Yes.
like minds in that perspective. And that's how think tanks are supposed to work. That's how the investment community literally is supposed to work. Because why? We know that the Wall Street bankers, right, or the central bankers and the fund manager, they're on their little side of the fence, right? They're not necessarily mixing with people who are on the retail side, right? So
Yeah.
their information is somewhat, in a lot of ways, classified for most cases, right? Even though there's a lot of public information out there, but they're dealing with a whole new different value of information, right? in real time, right? Because we know time and money is a very, very important equation in investing and trading. Why? Because again, things happen in moments where it could be a binary event, and if you late to the party, especially as a trader, of course, in the trader space, then yeah, ain't nothing left really for you to get out of it. A moment when people already kind of made their move, right?
Yeah.
So again, a lot of this stuff is great because I think now watching and witnessing 2020 how that unfolded as far as all that money that went into the hand of the retail investor because the Fed was accommodated, of course, but in the same breath, Wall Street walked away with so much more, right? Trillions and trillions of dollars, right?
Yeah.
And you're like, well, that's ultimately a lot of that was our money. When I say our money, meaning Main Street, because it was funded and fueled by what? The Federal Reserve printing money, tax dollars, invested. Again, tax. Citizens tax dollars in a lot of ways, right? So where they may be trying to double down in terms of taxing people now through crypto space and all that, they're trying to really tighten the wrench up on that. They ain't really the people they really need to be observing are the people who they give slap on the wrist, right? We know just recently the whole issue with the Elizabeth Holmes case, right? The Theranos scenario, right? How she just lied and finagled billions and billions of dollars out of investors just for out of basically a lie. It came out turned to be a whole lie. Yeah, but these people get slaps on the wrist, right? Mm-hmm. And they come out the average retail investor who really doesn't have a real big dog in the fight, as if they're gonna drop the book on your head, right? So again, we know the game is rigged from that perspective. Of course, we ain't ignorant, but that's a part of why we say the financial education aspect of this and the knowledge of being able to follow these circles, these conversations are great. They're great. Why? Because it helps you with your perspectives, right? You don't get too biased and you don't get too overly lax in the same breath, right? You find that middle ground and you adjust accordingly, right? So I think that's what you're starting to definitely even do now, Sister Monica, even more so now. And I'm excited to see the evolution of all of us because like I've always stated in the beginning, this is that kind of marathon, energy, right? It's fine wine, right? We get better. Literally, you get better with time. Why? Because experience is going to teach you how to do that here in a way where a classroom that's getting thousands upon thousands of dollars out your pocket per se may not in a lot of ways, right? Not that you can't benefit from them like that, of course, but I'm just saying you'll learn a lot of stuff just by putting in the time and having an interest in it, and you'll see how to use it, right? So shout out to Sister Monica again, making things happen, right? Again, I don't have the sound effects, but I would, I drop the bombs if I could. So happy to see that growth. And we're going to talk about some things today that may also add to your war chest today as well, Sister Monica. Within your breakdown, I think will be useful for you too. All right. So shout out to you. So yeah, Sister Angie in the building. I see you as well. What's going on, Sister Angie?
Hey, peace, power, and profit, everyone. Hi. Nice to see you again.
Grand afternoon to you. What's going on?
I just find myself in a more of an observing and studying type of mode right now. The kids, my children, I should say, we're all getting more information regarding NFTs, and they have their apps. They're loading their apps and learning about how to use their apps. So we're all in this more of a preparation, educational vibe in the house, along with my school and classes and whatever. So with my trades and stuff, I really have been putting more, trying to add more of the dividend stocks, the penny stocks, and like on my Ameritrade, I'll have like the micro penny stocks, or just to see. I'm just trying to learn that movement. Yeah. And I added one called like HCMC. I don't know what's going to happen with this. I'm reading good news about it, but it's going to be a while before any of these stocks on my Ameritrade even start to hit. But when it does, it's just like you just never know. So I still have the ambient water there. I'm just adding. Everything looks red now. It gets green sometimes and it goes back to red. But it's everything, because it's low now. It's like I just want to buy more and load up for the ending of next year or the ending of the year after, because I think that's how long. It will be like 5 to 7 years before some of these even really pick up a lot of steam. You know what I mean? But I'm here for the long term, here for the long run, and I'm not ever gonna rush again. With the get too excited with a rush. I listen to the news. I just want to learn how to learn how and when to take something big and put it in, and put it on a good investment, a good trade. And so that's what I'm doing. So really nothing much to um to report other than that. And then getting the tax stuff together. Yeah, that's what I'm doing too.
And this is
Organizing
that
is the
season,
first year.
right? This is you
Huh?
guys' season, especially you and Sister Monica, right? This is this is your season. In terms of the implications of that, right? Because we are moving under a different tax regime, obviously in the Biden
Yeah.
administration, right?
Yeah.
So that's important. And hearing all these things and how they're trying to really beef up the IRS to go after more money, right? To get more money, they feel like it's not being collected. Not so much the fact that they need to pass out more, but what's not being collected, and that's really gonna fall in the hands of what the real Main Street people, right? And so we know the big crooks get away with more, of course, in terms of those who got big assets and big in control, because we're witnessing that right now with the SEC being asleep at the wheel and a lot of other things that have happened, in and around markets, even with the Federal Reserve. Again, that scenario is back on the table, right? The guy, what's his name? I forgot the guy's name. It's on the tip of my tongue, but another, one Federal Reserve, I think he's a chairperson too, a vice chair, something like that. What it turned out that he didn't disclose all the information that was necessary within his SEC filings, his filings for the value of his stock holdings. Turned out that he was literally trading the market around federal policy. These are your central bankers. Let that marinate. And these people are just walking out into the sunset, still getting away with it. Nobody raising an alarm, but yet, let you miss a tax season, right? Let you miss your bad itemization, right? They're trying to bring the hammer, hellfire, everything down on top of you, as if you're a malicious criminal. Make sense? This is the extent of the system, right? So dare I remind you all, this is why we are taking up, that financial literacy mantle and trying to figure out better ways to secure income, but also manage it better too. Why? Because we know the system is more designed to take than to give, at least in America. Now, there's other ancillary things you will say, well, they still provide this. They keep the roads, clean and this, that, and the third, right? The little governmental small thing, but a lot of this stuff fall back on states, right? We're talking about federal, right? Federal, right? Because income tax is a federal event, right? That's a federal affair, right? So yeah, we know that there's a lot of things that need to get overhauled and cleaned up on both sides, right? So for what it's worth, that's why we employ people to learn how to also make money on their own terms, underneath their own dime, for that same reason, right? So kudos to you, Sister Angie, for that, because again, that's just a part of the growth too, and being patient, allowing the money to work for you, right? It's a marathon, not a sprint. Of course, we understand that when we do have moments of being able to ring the register, we want to do that too, right? Because again, you can make money along the journey of making bigger money, right? We don't always have to just hold until euphoria. We can take some along the way, and then when there's a moment where it dips, we can dollar cost average back in and ride it more, right? And that's a cycle of evolution and investing that we want to make sure that we're always realizing that too, because a lot of people will lose that in the midst of watching their moment go to the room, right? Go up 200%, 300%, 400%, right? Yeah, take a little bit, trim a little bit, right? You still got a little bit in there, trim a little bit, pay yourself, and then allocate some of that new money into other, lagging investments, right? So that's a part of 2022 that's also going to be very interesting, that we learn to do that better, right? Because Wall Street they're the kings at that, right? We want to be, of that same mindset too, how to reallocate money, right? How to, rebalance and move things around. Of course, you heard Sister Monica talk about a thrift saving plan last time we were on, right? Importance of that, right? Be it IRA, if you guys got that going, or just, different portfolios through different accounts, how you managing them, that's important, right? So that's important. So again, we're going to talk on that a lot this year as well. So we'll be right there to help and aid in that, Sister Monica, Sister Angie. So you need not worry. We're going to definitely get into a lot of those little opportunities like that. Why? Because this is a seek and destroy kind of market this year. It's not going to be, it's like throwing a dart, on the board and seeing what kind of stock, just going to go to the moon because all this Federal Reserve money being printed. It's going to be a totally different market this year, and we want to be cognizant of that. All right. So what's going on, Oba Son? I see you in the building too. Peace, power, profit, Oba. All right. What's going on in your neck of the woods? You're out there on the west, west coasting it, right? Out there doing your thing. So, all right, you must be caught up a little bit. So, Oba Brandon, what's peace, power, profit to you as well? How's your day going? Or you guys in the midst of handling business?
No, I'm here. I'm here. Peace. I'm actually in the midst of I was trying to share the videos and trying to spread it around at the same time. So
Oh, no worries, no worries. Multitasking a little bit. We appreciate that too. Give anybody, put
Oh
forth the
yeah,
effort, kind of, share the love and the joy, because we're a community over here.
No, it's all about marketing and advertising. So like it's free. In reality, it's free, but you actually can if a person is actually being for you or there for you, they'll spread the rumor or spread what you're doing. You know what I'm saying? And it's free.
No doubt. And again, from that part of what we say, we're village-minded people, as it is, of course, that we are, because we realize that the collective interest of an interest is great for everybody to have a few what they call irons in the fire, right? You have better results when you have that level of collective interest in play, right? That's how empires are built, right? That's how nations are formed. You know how this stuff works, right? So yeah, in that regard, because we endeavor to share, add, build upon, however you want to put that in perspective. All right, this moment. Why? Because we feel like everybody has something to contribute, even at a point where they may be new, but we understand that they have different talents and skills that they may have, on the business side of things, right? Or they're specific skill sets of education, whatever. It still is synonymous with markets. Why? Because all that stuff fuels the markets. It does, right? That's what I love about it, because it's very much so. It is a universal perspective. I'm gonna call it what it is. It's a universal prospectus, right? Like a stock in itself, right? That kind of white paper value of industry, of supply, demand, and opportunity, right? Now you bring all that together, then you can, kind of, parse the straw to figure out which ones are, the ones to be investing in right now, which ones may not. So Monica was speaking about that, Stangy, the whole idea of NFTs right now. They're kind of being at the forefront of conversation with a lot of people. Now, will it last? It turns out that at this euphoria state, 2-3 years down the road, it'll probably dissipate at some point, like all things do. Crypto did it, right? Marijuana space did it. All things go through that reality, housing bubbles. But at the same point, it doesn't mean that or negate the fact that that won't be an opportunity that you can't still plan for 5 years down the road. It's just like anything that comes in high value, everybody is excited about it and they ready to throw money around it. So the price is kind of rocket. And then when cooler heads prevail, when the market constantly show a semblance of how this thing gonna work out, then it becomes a game of let's find the better perspective, right? Or what they call the best in breeds, right? And then we can say these are better ones to kind of look at going forward. So it's just a mixture of that. So 100% in that perspective, Oberson, when you're talking about the village mentality in that regard as well, it does kind of work in that same likeness too, because a lot of people get excited, and then eventually, if they don't really find environments where they can hang out with other people, discuss these things, that kind of interest may lose. They'll lose it sometime, or it'll fade, right? Because they're like, man, I'm about to talk this stuff. All right, man, let me go back to give me 2 jobs, right? Let me get me a 3rd job or something like that. No, Bob, you do that, right? But so yeah. But anyway,
No, you're definitely right, because I mean I actually have a reverse effect that I'm trying to perfect. Let's say it like that, right? So like everybody I've been talking to, as far as like in the community and the people that's around me, um, it's kind of a reverse effect of how we're taught to learn stock into effect, because a lot of times in the street, I'll just say in the streets, right? In the streets, everybody wants that fast money. They want to see money grow quickly. So my thing is to get people in the pre-market. So a lot of times, it's backwards, because a lot of times they want to teach you about pre-market later on down the line. But my thing is to put people in the pre-market and learning how the pre-market works in the beginning stages. So when you start making the money, then you start being on the page of how can I save the money. And when you start saving the money or thinking about how you can save the money, this is when you start getting into the long-term stocks. So I got a actual backwards approach to it, but in my method, it's working for me greatly. And I love y'all because y'all help me in so many ways, because you guys help me in different aspects to put my thing together. But it's great.
Well, that's all it takes. Again, I like to say this, and I'll say this one more time. Again, this is what we live by. This is our creed, right? Our mantra, right? As we like to say, find your own niche, your own niche, but steal from everybody, right? Why wouldn't you? That's what makes this great, right? Everybody has a different methodology to a degree, but it's all synonymous with what trying to, end up at the same goal, right? To, again, acquire what interest on your money, right? The seek to get gains off your investment. And there's so many different strategies out there. That's what I love about this too, because I know you speak about specifically pre-market. And of course, that's that 4 a.m. hour, span between 4 a.m. in the morning when the market opens up for retail, all the way up until at least 9:30 when the actual intraday session opens up, right? So that's a 5-hour, 30-minute window of news that comes out, any time of day, because that's how markets are, they're governed by swaths of news that comes out periodically, no matter what time of day, because things happen, people make decisions, and wee hours of the morning sometime when you probably still sleeping. That's why the saying goes, right? People still making money while most people sleeping, they still making money. Why? Because decisions are still being made. Executive-based decisions are still being made. Even if they were made the night before and they waited to hold that publication to the next day to add fuel to their stock price, it's a strategic move. We know it happens. Nonetheless, it's still a thing that we have to take into consideration. And the same thing for after hours, right? The post session of the market, right? From 4 p.m. to 8 p.m., right? That last 4 hours of the market when, people trying to strategize for the next day, right? You get, licking your wounds or you counting your money, right? Especially, speaking to the traders, of course. But nonetheless, it's all synonymous to what, time availability you have, your disciplinary structure of understanding, how you do better during certain sessions. And also, again, what the investor sentiment energy is like as well during those moments, right? Be it, fundamental news might be moving things or just, whatever, right? So it's a lot that goes on into the market, which I love because, again, it's so broad. You'll never seemingly, master it to the degree where you feel like, okay, there's nothing else that you can really take or learn from it that you can use to implement a certain strategy with, because strategies change. That's the nature of market. They're volatile for a reason, right? So yeah, you will have to learn how to adjust, and I love that because, again, it keeps you on your toes, right? And it keeps you sharp. So now I'm starting to see that in a lot of you guys, because y'all just like many of us, even myself, we realize the power within, not being overly biased, right? We moved away from a lot of these, unhealthy echo chambers. I'm speaking for myself when I say that, but kind of clearing your mind, what I'm saying, when you can kind of focus on getting your business together, right? Your bank account business and other things like your future. So that matters. Why? Because it's a time consumption narrative, right? The more time you spend wasting time, that's valuable time that you can't get back, that you could have been using for more fortunate, things that can really help your situation. And so that's why I like that, because we have that interest, and things like this. So, for us, I don't know if 10 people show up, 20 people, 30 people show up and alive, we doing it, because that's all we need, and that when I say, well, we need, meaning that interest level within that, it'll expand at some point. But at that point, that's a think tank, that's a group of people that you can now focus with together to figure out opportunities, through values of markets and opportunities and different asset classes, forex, crypto, whatever. That's all you need. It'll grow eventually, but that's all you need to get started. Trust me, right? Just 2 or 3 alike minds that are hungry like you. That's a world of difference. Trust me, on the long, in the
You,
long run.
you know
Right?
what? Over now
So
that you
yeah.
said that, like in reality, we all can create baby hedge funds, like within our own family. Like, say for instance, me and my girl was talking about this before, right? And say I create enough money, she create enough money, and we save enough money for the kids, and then when they get old enough that they start having a job to where they can create enough money, and we can actually create our own hedge funds to be able to downsize or upsize certain things. It makes a difference. And then this is when you get these whales that come in. All these whales are hedge funds. and they're on the page of where whatever benefits their corporation is when they downsize or upsize whatever it is for that stock, and they do it every day, daily. There's thousands of hedge funds out there, from the smallest to the biggest, and you can do this as a family. And as a family, you can actually create your own wealth easy.
Well, that's the best way to look at it. And see, that's one thing I've definitely been beating the drum on for quite a while, right? So even when we talk about the $5, a day challenge, right? From that perspective, what is that? It's the collective value of a family susu, so to speak. Why? Because it's everybody coming together to put forth $1, $5 a day into a pot of what useful income or a war chest of money. Now that you can now take that money and do what with it? Make strategic investments with. Is that not what a fund manager does? They collect money from what? Patrons that want to utilize the opportunity to chase interest accruing what? Assets. It's not hard to do it, right? Because again, you're just trying to get the energy of people, in line to realize the power of $1. When most people will walk over, $1, right? Or they'll be too proud for reach down and pick up 35 cents that may be sitting on the ground. Man, I ain't for to pick up nobody loose change. Well, maybe right now because of COVID, right? But again, they got alcohol for that. But that's what I'm saying. That stuff adds up. Loose change adds up. We going back to the penny candy theory all over again. When we used to buy penny candy back in the days, right? 2, 3 cents, 5 cents, whatever. It adds up, right? Especially when everybody came together, say, "Boy, I got 5 cents, I got a quarter." Everybody put together what they got, and they just buy a whole, gang of, snacks or whatever. See, that mentality has to come back, right? Because again, the world will have you to believe that you are an isolated individual who's only need to be responsible for you and you only, right? That's a selfishness mindset that capitalism also will push you into sometimes as well. Why? Because the marketing and the news media perspective of it tries to set, that dynamic, of those who have and those who have not. And so you don't want to be mingling with people who don't have, because, they may a burden on you. That's the back way of look at life. That's not how life works, right? Because you will definitely lose your humanity in that kind of level of, selfish greed like that. And it'll have you doing just like that. Again, walking over opportunity, right? As if that's, whatever. So I like to take the approach again that's different, where I want to see how many people that we possibly can reach and find that maybe, maybe clueless or a little skittish, a little whatever, because collectively, again, these people have actionable skills that they could probably utilize in this market. Why? Because as a consumer, you're already contributing to it. Whether you hate, like it, or love it, you're already contributing to the market as a consumer. You're buying the products. I'm like, okay, take that same approach and now start thinking about it from an investor perspective, putting that $5 into the stock itself, right? That $2 into the stock itself, because you could buy fractional shares. We know that now. It's a whole different ball game now. Why? Because again, you do that time that, the allotted days in a trading year, which is around about 252 days, on a calendar fiscal side of thing, that money adds up. The same way if you do the $5 a day challenge at the end of the year, the $365. It's gonna be 365 days times $5, right? Y'all do the math on that, right? Roughly near what, $1,800 and some change at the end of the year. Well, that was just paying money for it to put forth in terms of an investment, escrow to pay off some taxes or whatever, to fund a trip. And it didn't hurt anybody. Why? Because it was incremental values of being disciplined and learn how to put money away. That sparks up within you mentally. Now you start thinking, okay, well, that's what investing really is at the end of the day. It's being patient enough to allow your money to work for you, or putting it away to the point where it can begin to grow legs and run later. Make sense? It's all about reshaping your dynamic of how you deal with money, the value of it, the utilization of it, right? The tool aspect of it. That's a game changer for a lot of people who have always been reckless with money, just blow money, think nothing about it, think they're too big, whatever, I can't not do this. And it's ludicrous when you think about it, but that's the hardest thing for people to do, right? To learn how to do just that, put money away for a rainy day strategically, not just for the fact that they feel like they need it for emergency, scenarios, but strategically, right? So that's what we're trying to get people excited about. Why? Because if this day, just for the sake of the racial dynamic, right? If they're saying that, Black Americans as in general spend up to about $1.3 to $1.4 trillion every year. We spend that. Notice, spend that, right? collectively, you know, how much would that benefit us if we even took a half of that, right, and put it towards a body politic of investments, right? A group investment endeavor, right? Like you were speaking about, open something like a fund, so to speak. There's some out there that's trying it, but you know, again, you know how this stuff go. You still got to have sharp people in sharp places. Why? Because that also says a lot about the credibility why we're so skittish about investing too, right? Because people have, you know, had bad and you know, experiences and this, that, and the third. But at some point, you realize that the power of investing and trading is a one-man army game. You don't need other people really to be able to access this opportunity. It's better to have other people around you because it helps you make better decisions, but it's still up to you to push the button in the end. So you got to love that, right? That's anonymity and it's sovereignty, and it all in the same breath. Seriously, you got to like that. That's power. That's why I say knowledge brings power. Power equals profit. You got unbridled power once you learn how to invest. And just who cares if you only doing it with $1,000 or 500 or 100 or 10,000 or 100,000? Doesn't matter. You have power over the collective value to make your own money. Right? That should be exciting to a lot of people, and doesn't care about your race, color, creed, sex, gender, orientation, midget, humpback, felonies, no felony, baby mother, no baby mother, good credit, no credit. All that stuff don't matter here. Yo, degrees, that stuff don't matter here. Like people like, okay, yeah, but I'm finna go all in on this Tesla put, and and it drops. Next thing you know, like, okay, yeah, about that. So I love it. From that perspective, it does put you in a position where you can make things happen. Right? So yeah, shout out to that kind of energy. So, Brandon, what you got, man? I know you out there holding it down too. The resident hospitals in the building. What's going on?
What's going on, family? How y'all doing today?
Doing well, doing well.
Peace.
Peace, man. 100%. Like you said, just saving, putting money aside. That's what I've been doing. Creating 2 retirement accounts right now. Obviously, I've been speaking on the Roth heavily. I've been focusing on that for a little bit. I've been focused on saving. Putting money into my account, even though these banks, like you said, are just charlatans and they ain't no good. You don't get a percentage on that. So I've been moving money from my bank into my my actual investing accounts. I've been studying the markets, looking at long-term plays I want to look at potentially. Pretty much what Mo and Angie said, I've been looking into. Basically, I think Mo said this, but looking into materials. And the materials I've been focusing on is one for materials for like energy plays. So I've been focused on the energy play materials. So nickel, copper, all that good stuff. Long-term investments I've been looking at water, marijuana stocks, crypto, and then solar. These are some of I think myself are some of the big moves that might jump off this year. But other than that, I still been looking at crypto. I've been looking at not crypto, but what's the other one? The Ethereum, and and I've been focusing on the actual transaction aspects of Ethereum. So instead of looking at Ethereum outright, I've been looking at other cryptocurrency that deals with transactions, transactions that link to certain web pages that you might use in the future. So that's my whole spiel, man. That's what I've been doing. And then again, like you said, I've been focused on watching the market. Thank you, Mo, for putting out that little video. I watched that earlier this morning.
The tax one?
Yep.
Yeah.
And that's crazy too, because when you think about it, when the government started putting stuff out, and all 3, 4 last year, they say, "Oh, crypto ain't going nowhere." It really got to make you think about, okay, somebody's lying, or somebody's lying to us. Talk about crypto ain't going nowhere when actually it's getting some traction now. So, thank you, Mo.
Mm-hmm. Yeah, someone had called me. Someone had called me and say, "Hey, I'm like, well, we researched everything. Let me look in the group. Somebody probably said something about it. Let me go check it out." And then I was like, okay, let me go find me a CPA who can give me some simple terms and some pictures on the screen. So
yeah,
yeah,
that's the thing I've been needing to do too. Not to cut your wisdom there, but I need to bring in a couple of that kind of energy too, because we've been needing to do it last year.
Mhm.
And like anything, you get caught up in doing other stuff and whatever we talked about, like we had on Dr. D that time. I actually want to bring her back, because she definitely, went through her peak to trough perspective of, building out her, her organizational platform. And, of course, she's definitely, a person of interest and knowledge, right? Because, definitely she does the Forex market. But again, taking that to the next level in terms of, being a published author, now I got the financial flashcards for people that want to learn Forex, right? Doing her own thing. But that's great because again, in this environment, people who've been in the game for quite a while can definitely give you what they call, hands-on, instructions, right? How to utilize, all the things surrounding this industry to your best interest, right? Through taxation, how to deal with that, how to deal with, the whole idea of how markets, work in general, just helping you with the psychology and a lot of other things that's fundamental. So we're gonna look to do a lot more of that this year. We kind of dropped the ball in the last year. I'll definitely be the one to accept that, right? But we're just so busy focusing on each other. That's probably why. But we're gonna make sure we definitely put forth that energy and initiative to get that popping this year, where we can bring in more of those people, right? So CPAs, people who dealing with major industry, who are good in the industries that they kind of hang out in, be it real estate, be it crypto, Forex as well. So the whole gauntlet, right? Even intra equity opportunities where people who may be good at options trading, is whatever. So whatever.
Yeah.
Right. So go for it. I'm sorry. Go ahead.
Oh, I had to tell some people, you got to spend some time with this. Don't be afraid of taxes. I'm never afraid of taxes because we know what to write off to kind of either balance it. You can't have it both ways, though. You can't want a tax refund and want to keep all your money in the year, too. Now, you just can't go be able to have it both ways. You got to know how to leverage one for the other or balance it out or break even. So if you're making money, that to me, you should be just breaking even. Should be good. If you owe nothing, they don't owe you nothing, and you walk away clean. But if you're trying to get a refund and you making money, you're gonna get yourself caught up, right? You're gonna try to find all the loopholes, all the little gray spots, all that extra stuff that just don't make no sense. Just go ahead and report. Know what you need to report so that you can make even on things. And so I'm gonna spend a lot of time on taxes in the next few. Now that I got this payroll system transition, just a little bit at a time. But the number one thing I would say, or last thing I say is, make sure you have some way to record keep, whether you're using our cash flow manager with the MyEcon, or you use a QuickBooks Self-Employed, or use the Tax Slayer, or whatever or using a spreadsheet. Just keep up with your stuff. And keep up with your stuff. Keep up with your miles is going to be your key. That rate has increased this year. Woo-hoo. So mileage is like, based on the tax rules we have right now, mileage is your best friend. So hopefully you have an app or you document it by hand to keep up
Cash
with
flow management, right?
Yeah, that's gonna be your kicker right there.
People don't understand the importance of that because man, the amount of information you gave out on that alone over the years, it just blows my mind.
Yeah,
because people are, again, their biggest crutch is money management, right? Or finding money to invest with. They want it, but they feel like they can't find it, right? Because again, they got to organize their affairs better, right? They got to organize their money better, so to speak, right? Their movements, their time, their wastefulness in a lot of ways. And it's a disciplinary, thing that everybody obviously needs to tighten down on, right? Because you never get, to the point where you don't have the need to better your business management, right? Especially when you know that the economy is wavering all the time, right? It's up and down because of political issues and this, that, and the third, right? We realize that, of course, like I say now, but before it used to be kind of foreign to some people, right? Not all, but some, in terms of the importance of it, right? Because I know I had my share of wastefulness in life, man, just wasting. Like, man, I wish if I can get back a third of that money I wasted on silliness, where would that money be today in terms of markets? Like, we all probably got that story, right? Like, bruh. So that's the good part about it too, because again, you have people who have those very skill sets that they have something to offer, in terms of helping people realize the importance of, again, being better at risk management, right? Learn how to mitigate their risk, values in life. so you don't be out there just chancing and willing it, thinking that live every day like there's no tomorrow, right? That's, to me, I think that saying is overrated at this point, because we see how that caused a lot of people to make a lot of foolish decisions in the end. It's not the best decision to teach a child anyway, too. Unless you're gonna shelter and shield them from all the the harm of the world, because you got to have a lot of money to do that, and then keep them isolated from a lot of influence, right? But that's not the average scenario. So so you're very. Again, we might need to go dust some of them old my econ lectures off and just bring them to the. We just replay it. You ain't got to hear them. Do that. We just replay some of your old content on that, and again, people will be like, it'll blow their mind because it's serious.
Right.
It
But
really
the thing is about it now is that some of the stuff I've learned with the audits, that the way I'm going to present this time a little different from going through these rigorous audits. Like 2021 was a year of audit for me. Like I went through every audit you could name. I got sick of auditors or whatnot, but Department of Labor.
The only person got more than you is Trump, so don't feel bad.
Yeah, I know.
Trump.
Right. And I was like, okay, I can learn from this though. Just things that you didn't even think of. And what's crazy sometimes about this tax law or these different rules? It's like, who has a hand on all of this stuff? But like you said though, they'll come and put their hands on it. Like, for example, if you guys have businesses, PPP was big, EIDL, but how they getting you now is that the feds in the state got together. They got this program. It's called it's some kind of fraud checkup, but this is what they're doing. The feds running your name through the state Department of Revenue database. So if you have a business, and let's say you had employees, you open up a withholders account, that kind of thing, you got your little PPP money, whatever. If you didn't file, PPP has been gone for a while now. So if you don't, but a whole nother quarter has passed. So if you didn't file the zero, which you can go back and do, but most people don't even know this, you didn't file zero in September 30th or the December 31st, in the year, in the quarters, then they put out a penalty, right? And say you owe them money. So here you are, they sending out these tax liens based on your business, and you didn't file the tax. Really, you just need to go in and file zero, and they'll wipe out the debt. But most people don't even know that. So while people were scrambling to get that EDIL money at the end of the year, couldn't get it, it's because Department of Revenue got your business down as a tax liability. So they put you down on a fraud list. They put you down on a no-pay fraud list. Oh, they're killing it. But I ain't gonna take this show to do that. But it's so much stuff I learned in like these last little whatevers, these little different audits that they're doing. They scheme and people don't really understand it because they thinking about the IRS from the old schemes where they got a whole new methodology they coming at you
because of how the liquidity of the feds and the over I guess the over analyzing of them actually doing something actually for the general public now in terms of giving away money to help them because of COVID. Now it's like, okay, we gave it to you, but now again, like the thing go change my mind. Now let me be a bit more stringent on how I oversee you with that, right?
Yes, you gotta oversee.
When they give it to corporate agencies, is that the third? The oversight is like right, we turn our head. That's how the system works. Like I spoke about that earlier, how it's a different ball game, right? From Main Street to Wall Street. So yeah.
Yes, and they coming at you, but you just go in and file. You make but I'm trying to tell people, don't be afraid of the taxes. You could really leverage it if you pay attention to what the people who talking about it. But if you don't, you get in more trouble when you don't file versus when you do. And when you do, you just need to know your write-offs. But don't be lazy. People are lazy. They don't want to account for things. All that money you're spending could be used towards something as a deduction, but you are so lazy you won't even take your time to swipe an app right or left to keep from paying taxes. But anyways, we'll talk about that a lot more.
You right, exact.
That new tax form is really it has a lot of people with the child credit, got the little $300 they're going to have to offset. There's a whole bunch of little stuff that's going to be a culture shock for those folks out there who be waiting for their tax return at the end of the year. You're going to be short $3K, but so instead of getting 5, you
because
might get 2.
they're paying you for it in advance, and that's a lot of things people also, whether they knew or they not, because they say, okay, this is a great, this is great, right? I get this money up front, which is good, because again, if you got everyday bill like today bill, you don't want to wait, on a tax cycle to, to utilize that credit if you feel like you can use it now, because that's for people who are really hurting, right? Think about that.
Yeah.
And it makes sense in terms of help, child care in that regard. Now, if it was just free money, like surplus money, right, where the government allocated money to the side, we just gonna pay this, right? This is on us, the government, then it'd be different, right? But we know how the system is set up in that regard, because I was reading something recent about tax, child tax credit, and how, of course, all this stuff is starting to lapse now because they couldn't get the Build Back Better plan, obviously, on the table before this next cycle of allocating budget. So now it's parlaying this year. That stuff in the lapse is gonna go to the sideline, right? So that money is going bye-bye, until they come up with something, right? So the same way I had to do that with student loan, right? The student loan borrowing, they pushed it out to May. It's like May 1st before the payments began to kind of start up again. And so I was reading something today as well about how they were saying that money that people didn't have to pay for student loan unless they just chose to want to still pay if they had it. That was less pressure on people to make better financial decisions, but be it better, to look for better jobs, this, that, the third, because now you don't have to worry about the burden of, I got this student loan debt, I pay this amount, I need to have a job that's equivocal to that value, right? To help me have that, extra to meet my bills, to make that value. So that relieves a lot of stress off people to go out there and, live a little bit, freely and make better decisions. So that's interesting too when you think about it, because again, that's a lot of people, it's like a child, like you got a child, that's a big debt, right? It's a word to debt, but it's a big debt. And every move that you make, once you have children, has to be more calculative in that regard. And you don't have that leeway. Is this when you were single, like, okay, yeah, I can just blow money, do whatever, blah blah, and that's fine. That's not the case. So yeah, we realize that now. That a lot of these psychological pressures are stemming from the fact that this is a debt-based latent society that really caters to, again, you having to be able to literally work the system to the best of your ability to get ahead of it. Because if you stay at the same pace of it or behind it, you're in trouble. Yeah. Why? Because inflation gonna eat you up. The different tax mandates that go, change through different presidents might, eat you up. The cost of living is continuously going up. It doesn't go down. It never goes down. That's gonna eat you up. The minimum wage ain't keeping track of what the real value of what you should be getting paid. In terms of the economy and inflation and all that stuff. We starting to realize that now as investors, because we now to track the commodity market. We now track those kind of things a little bit better now. So that's going to eat you up if you're not, privy to understand that. There's a lot of things out there that are already set against you. And then IRS, again, is still, the number one, that's the head honcho, right? That's the one that's definitely going to, do you if you are, gainfully trying to use the system through your social to work it to your advantage. Why? Because they tracking you. They track you, right? They track all your financial movements if you have, anything that's attached to your social, right? So yeah, it's a lot, that people have learned through this whole situation because of COVID sat people down to sit and learn a little bit more. They're now having to realize that going forward, things should not be the same. They should not. You should not want to go back to the same ideology that you had, pre-COVID, not financially at least. My opinion. That's just my opinion.
Say it again.
Right? That's just my opinion, right? When I get my hair done at, like Cat Williams said, that's just where I get my hair done at possible. That's just the reality. Why? Because you saw how they just gave, again, the wealthy trillions of dollars of taxpayers' money. Biggest financial heist ever in American history. And people sat through that with their hands crossed, lips stuck out, poked out, and making excuses why they don't need to figure out better ways to, work the system to their advantage now. Makes no sense to me. But that's why we exist, so we're gonna keep breeding this drum. We're gonna keep making this stuff relevant because I think everybody needs it. All right. So what say you, Ober Chris? Are you in the building as well? Shout out to Ober Chris in the house, right? You probably don't know if he's busy or not. Ober Chris in the building.
What's good? Good.
You got it. What's going on in your neck of the woods today?
Oh man, just hitting this 9 to 5 real quick. But Yeah, 2022, it's gonna be good for me. I know I'm gonna have some opportunities to, go on to other people's platforms and kind of talk about, the stuff that I do, and especially dealing with sneakers and how, I kind of integrate that with the stock market, and kind of show, the pluses within them both as an asset and collectible value, and to be able to talk about that, because the sneaker game is big, but they don't know the flip side of that, you know, how much money Nike and all these other companies bring in off of their dime, by spending with them so much. And so if you don't have, you
Origin
know,
revenue.
right, you don't have any equity or any stock with these companies, then it's kind of like, it's good that you collect, but you can't just be a consumer. You also have to be an investor as well.
Undeniable facts, right? Like if people ain't realizing and registering that now, it's like it's gonna be hard for them as the years go by because they're gonna feel like the more and more of these assets, whether they balloon a little bit more, whether they pull back and offer a great buying opportunity, but a lot of them are definitely a lot higher than where they were, 3 years ago, 5 years ago, 10 years ago. Well, that's because these companies are still figuring out better ways to market products and items to you, right? They still got to, keep that supply chain or that assembly line of moving products through the consumer, well greased and positioned to continuously making money. Why? Because again, the growth of their stock is also tied within the value of how well the consumers receive these products, on average, and how well they can be marketed to buy literally the same product over again the next year, just with maybe a little high, different color, right? A different little design on it, or whatever, right? As if a lot of people don't realize it at this point. That's just the reality of how America works in that regard. Is basically America as a corporation is more of a service industry now. We used to have again the mechanics of plants and things like that, manufacturing, but we've moved a lot of that stuff overseas through outsourcing because they got greedy and they want to get the better bang for their buck. American government sold a lot of Americans out, call it what it is. And now we're more service-based industry, right? We utilize the ability of drop shipping, right? Services as a business and all these different serviceable industries. Like you look at the people that was getting a lot of the EIDL loans, right? And the PPP loans or whatever. A lot of people was in service-based industries, right? It's weird when you think about it, like, man, this is crazy. A lot of people out there, pushing something, right? Whether they have the tangible product there or not, they're pushing a service. So that's just the nature of how America's set up now. And that's not necessarily a bad thing because you can command a lot of dollars through consulting, right? Consultation values, and also just being a liaison to help people, connect with, other sources, right? A product or another source, service, or whatever. So again, that's how YouTube blew up even more because of what COVID. Like everybody became content creators, all this stuff, all of a sudden, right? And it's crazy. The money they're paying out, it's crazy, right? So there's a lot to think about when you're, looking for, again, shaking down different avenues, opportunity that are out there. And one of them where we say, well, a lot of these different industries that shown to be, again, they're here to stay, right? They're Teflon done. They're stationary. They're static. We already know the sneaker game ain't going nowhere. As long as the NBA cranks up that champ, their season every year, college basketball cranks up their season every year. Heck, even football, right? Because again, these guys don't wear cleats in real life, right? They ain't out there in Italian suits with cleats, football cleats on, right? Right? Again, it's a market where that's always going to continue to expand because people going to be like, well, what's the next design's going to look like the next 5-10 years from now, right? So there's always going to be that greatness of the market. And now it's becoming a more of a collector's value. Why? Because people starting to enshrine a lot of that, the nostalgic value of having these classics, right? Because the NFT market is starting to really make people feel like, okay, I better start holding on to some of these people paying top dollar for these collectibles. Why? Maybe I don't know. It's just a different energy now where people having, their items appraised for values like that. Now I got a couple things I got that's, I've revealed them before, but they hold value. Like, okay, let me be a little bit more, conscious of that, and realize how to use that. So in the sneaker game, definitely, we want to definitely tell people you might want to get over Chris, because he definitely figured out how to really expand this knowledge in this space, and he's growing. Right. So again, that's why I say it's great to have people from all walks of life, in your circles, because they can help you also if you have a liking or interest to that. Make sense?
Right. So, being able to, to go on other people's platforms and kind of talk about these things is gonna definitely open up some things for me and kind of get my name out there. Uh, that way I can kind of teach them about this type of field that they probably have no knowledge of. So just leveraging that
And
and
that's a
going
good
with
thing,
that.
because we got different platforms where a lot of it is just, based upon historical knowledge, right? But again, we ain't really challenging a lot of the modern, aspects of the financial side of things. Make sense? As I've said many times throughout the different channels and within our little collective urban scenarios and settings, where we got to figure out how to monetize this information. It can't just be, let's just argue a conversation or a debate conversation. How can you monetize it? Because that's what other platforms figured out to do. They figure out how to monetize it. And I think that's the next level within that, where a lot of what you're learning as well over here, as well over Chris, and that you've already known before you even met me and grown throughout your own evolution in this. You can now take that in those arenas, not just over to anybody, of course, but, even more so, we know they need it. So I was, sharing that also with brother NBK. I mean, not NBK, but him too, but definitely brother Dan, a true story, because I want to get with him and start kind of, helping, bridge that little bit, with NFTs, crypto a little bit, so we can
Right.
start seeing that, that path, expand.
Absolutely.
You see what I'm saying?
Absolutely. Yeah. So, and, as far as what I'm doing, as far as in the markets, I'm still, I'm buying more gold and silver than I am anything else, along with Ethereum and Bitcoin. Uh, Equities, uh, letting off the gas a little bit, taking profit, and, just playing the field, seeing how things are.
Repositioning. Again, that's the whole name of this game. People fail to realize that, I guess people don't think that Wall Street takes profit. I don't know where they get there from, but yeah, Warren Buffett does have buy and hold thesis, but he definitely knows how to ring the register too. Right? So, that's another part of understanding how the game works as well. When you're up exorbitant values and and gains, right? Yeah, there's a moment where you can pare back some of that again and then move some of that profit, some of it into other, lagging assets. So different new genres of asset classes. And you can still continuously recycle and grow and grow and grow. Right? Again, compounding interest, right? Again, best mathematical, or they say that it is the best mathematical equation out there, basically. The power of compounding interest. All right, because again, it multiplies a lot. It multiplies so fast when you're disciplined and understand how to use it, properly. Right. So that's literally a wealth creation, algorithm in itself, right? When you're using the proper assets to do it through, quote unquote, or many, right? That's the great thing about being, diversified, not having all your eggs in one basket. You have to, learn how to move money around to different, assets that are doing good for their seasonal value or cyclical season. Like we talk about a lot on here. That's why the value stocks starting to get that kind of, the ticket punch. That's how, again, this stuff works in that regard. Right. So nonetheless, again, just a part of, our daily bread, quote unquote, what we talk about, what we stand for, and the importance of that. So really quick, so I'm gonna jump down here in the bottom of my description box and go through these 5 steps and, just kind of give a little, a little information going forward for us the week to look ahead, right? Some of the things that are on the table, of course, the importance of them. That way, of course, a lot of you guys are already on top of this data, but we like to provide, again, some kind of layer of like a syllabus, so to speak, like a week-to-week syllabus, if we can get in the habit of doing this more often. But nonetheless, y'all know how to go get this information. But when we do come on, we're going to speak about it. So the main topic of discussion within this top 5, right, things to watch in the markets this week. Of course, it's the most notable one that we're all dealing with in terms of inflation, right? Because people can't dodge that bullet, no matter who they are. Now, wealthy people obviously can pad it better because they got funds to do so. But those who are might be struggling because of work and other things like that, they have to deal with inflation on a whole different level, right? How to move money around, how to make sure they are conscious of it, because it costs more, right? You're getting less for more essentially when you're dealing with inflation. And so just thinking about that, we got a CPI data, headline coming out this week, right? This Wednesday, to be exact, if I'm not mistaken, right? So Wednesday's CPI, could definitely spell a lot more pain ahead. When I say pain, meaning for those who've been trying to, downplay that, the value of the seriousness of it, in a way where stocks are just being, rising still, throughout all this bad information, they can't continuously, beat that drum anymore as well. Now it's going to, become more relevant. And it's a reticent moment where the Fed need to start saying, okay, let's pare back some of all this liquidity that we've been just dumping into the markets and start thinking about, really getting our stuff together, because we have overshot our targets. We've definitely went above and beyond. And because of that, that's why, these, red hot, readings are starting to flash, right? They're starting to, become like, hey, red alert, bro, it's time to, pull back. You just been going on and on and on. You just haven't been thinking about, the flip side of this. So they're starting to backpedal now, right? So, of course, like I say, with dealing with inflation in that perspective, you guys know as well as I know, if you're paying a little more at the gas pump, at the grocery store, whatever, you may want to follow these data points, because from there it can help you be a little bit more better at your micromanaging your budget, right? Whether give or take, if you really paying attention, or you might just be a frugal person in general, even with bags of money, this can help you, right? Because this is these kind of quote unquote national averages, even though we know those numbers could be skewed and cooked, and they're not really giving you all the data. Because I've read something the other day where, I said this before, like anytime they give a readout like 6.8 was the last CPI readout, now technically we all know that's about 7.5 on the reality, right? They're going to undershoot it, because number one, they don't add oil and food, right? Like those are two biggest consumption that people use, right? Gas and food, right? So how you don't add that into the report, like that in itself is ludicrous to me, but whatever. So yeah, so let me jump over here real quick, and then we'll hit a couple of topics and we'll get on off here. But just adding some to this moment here. Excuse me. Matter of fact, let's go over here. Let's go to blah blah blah. Where we at? Let's go to the actual page where I have. Okay, here we go. Why I'm tripping. All right, yeah. So, over here on investing.com, of course, this is a website that we always advocate that we use a lot over here. Not that you have to, but is direct and well sourced in terms of what they do over here. It's a well known publication that a lot of the big wigs use, as even down to the most layman retail investors. So we definitely use it for a lot of market analysis and economic calendars and dates, things of that nature. I pull from it a lot, right? So just jumping right into it here, as you can see, make sure we have it up where you guys can view it. Are we sharing? Yes, sharing. Okay. Sorry about that. All right. Let me hold up. Let me do it this way so you guys can see it more directly. So concerning this week that's coming up, right? So the coming week will bring closely follow inflation figures, right? So while Federal Reserve Chair Jerome Powell and Vice Chair Leon Brainerd, right? That guy right there is the vice chair, this female, Leon Brainerd. Hold on, is that's her? Yeah, I think that's her, if I'm not mistaken. Are to testify their nomination hearings on Tuesday and Thursday, right? I keep thinking about the other guy, right? He just got ousted recently. That's the one that's got caught for insider trading too. Right, but respectfully, it also marks the start of a fourth quarter earnings season, with several large banks reporting on Friday. So this Friday we have the kickoff of the Q4 earnings cycle. So this one's going to be very interesting. Why? Because we realize now with inflation, this genie is out the bottom, and interest rates are starting to raise. Right, yields are starting to rise, and bonds begin to be dumped that means that there's going to be a flight to what? To a lot of financial sector stocks that have that value of interest accruing, income driven by those things, right? So people going to run to those banks. They're going to, again, we've seen a lot of banks just breaking out like crazy, right? Bank of America, Wells Fargo, many others, whatever. So we realize that these are things that are going to be very useful in 2022 as investment values, as interest rates begin to rise again and the Feds raise interest rates. The banks are going to benefit from that, because that's how they make their money, through what? Taxation, interest, right? No secret there, right? So we want to make sure we understand that as investors. So volatility, right, looks to set to remain elevated in equities markets after a choppy start to 2022. So the first week in any new year, supposedly by old standards or historical records in the markets, that this is the time to really show or set a tone for how you want your market to be. Well, we opened up the first week in January and it was just what? Blood, right? It was just a lot of stock selling off, tech sector being taken to the cleaners, people skittish about the economic data is getting ready to come out. So we're already starting to see a lot of that buy the dip energy starting to unravel, and the fear or capitulation is starting to kind of rear its head a little bit, right, through the value of volatility. So that's important as well. We got to make sure we realize that, so that way you don't get too comfortable in one set strategy or one set position on the parallel, right? So set to remain elevated equity markets have choppy start of 2022, right? So, and Bitcoin remains under pressure. We know Bitcoin is again taken to the woodshed right now. Why? Because it's been correlated to the equity markets. Why? Because liquidity or stimulus serves a Bitcoin-based market, because it does not have a business model that in itself produces income as it being just a store of value. It doesn't have a use case on a tangible, fungible level, like you going to the grocery store buying milk, egg, cheese, like that. It's a store of value. We know that. It has utilitarian functions that matters to make businesses more efficient. But we know on the major aspect, being it's not an equity or a security, it can't be tracked by those data points. So therefore is known to be what it has always been set up to be, as a decentralized value to, again, store value or harbor some kind of form of a wealth creation based upon its ability to allow the end user, of course, whoever that want to buy into it, to utilize a different monetary system outside of that, the one that they're being heavily taxed through or disincentivized through the value of how they really don't offer a whole lot of incentives with you having strength in your money, because the US dollar, obviously, it goes up, it goes down. It's the reserve capital, currency of the world in terms of US money. But like many other scenarios out there, there's just too much, I don't know, maybe bureaucratic stuff that comes along with these central banks that people don't feel comfortable with storing their value through the value of the power of the dollar, right? If it's not gold, silver, commodities, things like that, a soybean farm or something like that, or a corn farm, then yeah, crypto is now becoming that new kid on the block that can help you do just those things, right? With a form of anonymity to a degree, right? We know it's going to get regulated more at some point in the future, but for now, it's still giving you some kind of form of anonymity. All right. So again, inflation data. So Wednesday's consumer price inflation data is expected to show headline CPI breaking above 7%. So we're now expecting to see above 7%. Last cycle, we saw 6.8, but we know reality was about 7.5. But anyway, so 7% year over year, right? Rapidly approaching the 4-decade high, right? A 4-decade high. So last time we seen inflation near this high was back in the 70s. Right? Some of y'all probably weren't even born then, like, man, the 70s. But the 70s, yeah, the 70s. So that's, and obviously a lot of that was under Jimmy Carter, Nixon, right? They were just, oh man, it was a mess, right? Nixon kicked it off. Jimmy Carter made it worse, and he tried. It was a mess. Anyway, y'all can go back and look that stuff up. Right? So with the core rate rising above 5% year over year, the producer price index, the PPI, that is, the producer price index or inflation data point following the day is expected to show a surge higher too. So that one I think was around about, what was the last PPI? You guys remember? I think, was it like over 7 something there, 8 something around there? And it's certain it's going to be higher this time around. So that shows that even the producers, meaning those who produce the goods and services, they're getting hit hard too because of what high commodity costs, right? Which again, at some point they're going to have to pass that cost off to the consumer, which is you. They tried their best to hold back from doing that last year. Now they're forced to. They ain't got no choice. So expect prices to go up for, you know, some of the basic items that we talked about before. You know, milk, egg, cheese, gas, used car prices. It can get a lot worse before it gets better. You know, so be cognizant of that. Be aware of that. Right. So the inflation numbers will likely underscore why the Fed could start its rate hike as early as March. Where we know that now after the last federal minutes that came out last week, the FOMC, that they're now expecting at least March liftoff for interest rates. It's not going to be a lot. It's going to be like a quarter basis point, or they might do something, throw a monkey wrench and do a 50. But as of now, it's only going to be a quarter basis point. So right now we're seeing that basing their quarter basis point away from zero. They're just taking it up to what, 0.50, right? On the national treasury side, you know, things, right? Which is still a problem for equity markets. Why? Because that's going to start to really, you know, weigh on a lot of these highly overpriced tech stocks as well. Even though Wall Street will try to have you believe that all this stuff is, you know, priced in, I bet to disagree. That's just more of them trying to say what, trying to have it both ways. Again, hence my meme earlier is what? Change my mind, right? Can't have it the same, right? You can't have it both ways, right? Low interest rates justify high valuation. Of course, we know that, and we knew that, and we saw that all of 2020, all of 2021, stocks were going to the moon. Rising rates won't hurt the stock market. That's the latest talking point that CNBC, Market Watching, other publications have been trying to preach. Now, y'all know, we know that they're lying. We know that they're lying when they say that. They will bake a cake and make the interest that, yeah, but we saying that because, yeah, you can invest in other stocks like that, but you can't throw around blanket statement like that without proper context, because the average investor who just read the headline, they're like, oh, we think we're still good. Buy the dip. We still buy the dip. You know, stocks only go up. That's the lie. So we have to be, again, understanding of that, so we don't jump out the window and get caught out there like that. Right. So you can't have it both ways. Change my mind, right? Wall Street would definitely have you thinking that. Right. So don't be fooled by that. Right. Don't fall for it. Right. Be cautious, be prudent. Basically is my point. Right. So jumping right back into that. So adding to the argument for faster tightening in Friday's jobs report, because that number was a disaster. Well, why was it a disaster? Right. It was a disaster because they did not plan, even though they thought they had a handle on this in terms of, you know, the growth of stocks, you know, people that was not growth stocks, the growth of jobs that were going to get created in the month of December, because we know there was a holiday cycle, marketing blitz cycle, Christmas, the whole ideal of that, people spending for their own respective Christmas, traditional things that they get into coming out of Halloween, Thanksgiving, going into the new year. They thought that more people will be getting, picking up jobs because the vaccine mandate also was going to force people to kind of, bend to that wheel and go ahead and decide to get the jab and, be accounted for as having it. And that's a big issue now because the Supreme Court's holding that case up right now as we know it to be for the OSHA scenario. That's a big problem because people feel like I'm not going to submit to that kind of level of executive control, my body, my rights, kind of like the whole issue with the abortion thing to a degree. And now that's a big fight where people are not going to just run out there just to get, employed when they feel like, okay, we just saw the stock market just go ballistically over dang near 100 plus points, 100% plus in the last near 2 years. I might as well go learn how to do that than go risk getting COVID, which is another issue that Wall Street don't want to, account for because they've been so greedy being the in club, right? The good old boy club, that they can't seem to accept that. Now retail people are starting to become more conscious of stock market value, and they wanting to learn and they're getting into it. So they got to account for that now. And so the Federal Reserve is definitely in a hot seat right now for their policies, but nothing that we haven't seen coming, and nothing that we're not prepared for. Why? Because where you may say, well, at some point it's going to peak and it's going to die back down and things will get back to normal. Well, again, that's what we've been talking about since this has happened, meaning COVID. Nothing goes back to normal after this. Like, you don't get to pick and choose, in your historical timeline of living, how you feel like things should, be set in motion, because every day is an enigma, right? We don't know whether it was manufactured. Not gonna know. People like throw that out there. Of course, I'm not coming from any camp of understanding of any of that. I'm trying to speak to the value of, on the financial side, things are not going back the same. right? They're not going back to what they was before COVID. So it's about time we start realizing that. Right. So the Friday's job report, of course, they missed on, the non-farm payroll, right? They had expected 422,000 jobs to be created, and America only produced 199. So about half. They came in under half. Not even a third or quarter or eighth. They came in under half of those numbers. That was a big miss. And some would argue, well, this is why the Fed need to continue pumping money. See, we told you that this is stable because of COVID, but they're not factoring in the fact that the inflation is based upon the Fed's over extenuating that their powers to liquefy markets is supposed to really helping Main Street get back to work safely. You wouldn't have this problem. And then, of course, in tandem to the government, because the Congress is just a mess. They sloppy. They just really messy at this. They dropped the ball so much. It's not even, look, it's crazy, right? So you can't have it both ways in that respect too. Again, you can't have it both ways. You can't continue to print money and then, act as if we know that there's a lot of jobs yet to be filled. So that's not a problem for all jobs to be filled. There's a lot of jobs out there. It's just that the Biden administration is also putting a nail in their own coffin through forcibly trying to push the vaccine mandate, whether you for or you against it. But that's also causing people pause to not want out there and get a job. Let's be honest about this. That's going to hurt people from going back into the workforce again, because they're like, I'm not going to submit my body to science, like that, when I feel like, it has this, that far as survival rate and this, that. There's many different arguments within that. Of course, it's not what we're going to argue here. I'm just using that as this is what a lot of the things that are happening, why is that, challenging of this or appeal of this in the Supreme Court to date. And so that's a conflict of interest as well. That hurts also, his government approval, the value of jobs being, something, a job where you can have a better read on that now, because people are still fearful. They can't really account for all that fear or capitulation of people not wanting to go back to work. So that's a problem for the administration. Hate, like, love, and indifferent. That's just how politics works in relation to how markets see them, right? So yeah, so labor markets, are in trouble still, right? It's not as, but that necessarily mean that the Feds can now reverse their entire course with dealing with inflation and go back to print money, because that's what's causing the inflation, right? It's crazy, right? Like, can't have it both ways. Can't have it both ways, right? So yeah, the days of them just it don't matter, just print. No, it's no more just push. Push the money out. They can't do that any longer, right? And get away with it, right? Again, change my mind, right? Change my mind. It just won't happen. Just my opinion, right? That's just my opinion, possibly. All right. So yeah. So going through this real quick here. So again, while jobs numbers underwhelmed in December, the unemployment rate tumbled to 22-month low, and wages increased solidly. Now, when they say wages increased solidly, we know that's also ambiguous. Why? Because we know that any wage increase that most people have gotten to go back to work, even they're giving out incentives now. We're giving people what they call sign-on bonuses to get a job now. It's gotten that bad. They're giving, employed people who went and got the jab, meaning, got vaxxed up. They're offering these people signing bonuses and bonus money, to come to work. So on the flip side of that, if you are looking for a job, you probably can get some good employment out there. You could be very strategic in your ability to negotiate better pay. Let me say that, right? Because that need to get people back to work to help out their scenario a little bit, because they know they're gonna have to put people to work to help their bottom line out, because the Fed's going to remove the punch bowl. Companies can't use the value of just doing buybacks alone with no really organic growth in terms of their ability to R&D and CapEx expenditure. They can't rely on a growing business unless they have proper employees to help them do that now, because the punch bowl money, borrowing cheap money at low rates to use that money to really just buy back your stock to float the company during these kind of bad moments, that's finna go bye-bye. Let that marinate. It's going to go bye-bye. So they need production. That's what helps, get people out of inflation. You need production. It's a lack of inflation, production that caused the inflation to exacerbate. Because now we're basically moving into what I consider to be the fog of stagflation. Some people say it's already here. And in some cases it is. When we hit a stagflation readout, then it really can get bad. it really can get. That's when governments get really desperate and wild stuff happens, and markets get very volatile, and it can get messy. It can get messy. All right. So number 2, big problem for this week, or big event for this week that we all have to be conscious of, is that, again, Powell testimony. He's actually going to testify again before the Senate Bank Committee this Tuesday. Now, y'all know how the last one went with him and Janet Yellen. Boy, they raked hot coals across his back. They put ice cold water across his bare behind and the freezing. They took him to the ringer. They made him confess to a lot of things that he was doing that was very reckless, and he couldn't get away from, when he do his typical FOMC meetings, when he in control of everything, he could not run from the question that the Senate, was putting across his his table. And so he had to admit to a lot of things that he was doing that was reckless, that was not warranted and overly excessive. So he can't backtrack that now. Even with Omicron and the Delta virus starting to surge again, they still can't backtrack that now, because again, you can't have it both ways. The theme of our conversation is that you cannot have it both ways, right? Where I will say it this way: the cure can't be worse than the disease, because at this point, the cure is becoming worse than the disease. It is worse than the disease at this point. Printing all that money is worse than the value of people dealing with COVID and the financial implications that's coming behind that. That's just the facts of things, because people are hurting. Where it matters most in terms of paying bills, because debt now, I read another piece of data, the point the other day, that says that people are starting to default now, right, early on some of these short-term debt values. They're starting to default. Why? Because, again, the economy in itself is still in shambles. People have been utilizing the stimulus checks as far as they can go, and now they're living off credit. And now they're starting to default a little bit on that credit. Yeah, they got some problems to deal with, and it's midterms coming up. It's going to get messy, right? So Fed Jerome Powell is due to testify Tuesday before the Senate Bank Committee at a hearing to confirm his nomination, number 1, right? Get that out the way, right? They obviously renominated him again, right? He was a Trump appointee, and Joe Biden chose to keep him on board. That's a political move, right? And there's a lot, we can talk about that a little bit too, whether it's good or bad, because that might also be something that could turn around and hurt Joe Biden. Let that marinate. Him appointing Powell back could be one of the things that may end up hurting him if Jerome Powell don't reverse his course and really try to get ahead of fixing the problem of his incompetence that he presented to him, basically the world over in dealing with COVID, right? They're gonna say, well, we did the best we could work with what we had. They always gonna say that after the fact, but what the people already locked in them gains? What the people already locked in the gains? And people who are not as fortunate are hurting worse than they were when they thought that money was really being useful. Let that marinate for a moment, right? So him and his co-chair, or the vice chair in terms of Layup Brandon, is to appear before the same committee 2 days later, or she's going to appear 2 days later for the confirmation hearing of her nomination, and they're going to ask her a certain question. Again, it's not just okay, you showing up to get your little walking or your little credentials, but no, we got questions, because inflation is starting to flood these congressional people's offices, right? The phone calls are coming in, right? They want to get reelected. They can't go through the midterms with all these angry people wondering, who's causing inflation? What's the problem with all this inflation? Once y'all rein this inflation in, they got to find somebody to blame, right? Let them marinate, right? So several Fed officials also are due to make appearances during the week, right? So, they give, certain commentary values throughout the week in terms of what they're looking to do, kind of adding context to their actual, Fed minutes, the papers that they put out, like a beige book, something that they got to go out and explain a little bit more in depth. So you will hear them speak, multiple times throughout the week, certain ones speaking about certain things about the economy, this, that, and third, trying to, basically add a Band-Aid to all this bad data, basically call it what it really is, right? That's all they're doing. So y'all see the names there. I ain't got to go through all the names, but they're going to speak this week well. So that could either add fuel to the fire of the market this week, or it could douse it. We'll see. But as now, the energy in the market is that what they're feeling a little skittish, and people aren't so excited about, just buy the dip. Apparently, because the markets are pulling back a little bit, right? So their comments will be closely watched in the wake of last week's Fed minutes, right? Which we talked about that. which indicated a very tight job market and elevated inflation, might require officials to raise interest rates sooner than expected. Again, Wall Street have not been able to price this in yet. They're going to continue to tell you that they figured out a way to do it, but they have not. They can't account for it. Why? Because there's too many things going on surrounding it. That's why. There's other problems out there that they're trying to also deal with. It's too many irons in the fire that they're fighting to try to focus on one alone. Right? So they're in trouble. Right? So earnings, that's the third thing. So earnings, this is the week that we kick off what? The Q4 earnings cycle. And we already know what that's probably going to look like to a degree based upon a lot of the guidance that we got coming out of Q3. A lot of these highly frothy companies like Apple and Netflix and Google, we know a lot of that, high flying income revenue and user growth is starting to wane a little bit now. It sounds like some people say about the vaccine, it's starting to wane, right? It loses efficacy over time. Well, guess what? A lot of that money that it was able to get, it's going to start to backpedal a little bit because people starting to reallocate funds in other places that they needed the most. Dealing with inflation, they don't have the ability to splurge on all these, I guess, novelty discretionary items to a degree, some of them. And that may hurt a lot of these high equity, growth stocks, right? It may hurt them. So again, we're going to be, definitely watching this and seeing how these numbers turn out. But we know one sector that's definitely going to benefit the most is the banks. Why? Because again, in high interest rates environments, banks do better. That's how they make their money. This stuff ain't rocket science. It is not, right? It is not rocket science, right? So let's be understanding of that. So if you are a person who, was looking for, to put a little money to work, you might want to assess that sector a little bit, the financial tech as a whole, and just the banks themselves. You've got to figure out which ones ain't overly, extended to the point where they might not can't receive a haircut, and find the ones that may be underserved that may have ability now to play off some of that, rebalance of the money coming in maybe into some of their coffers that could be useful for you as an investor. Right. So massive. So as you see some of the banks there, JP Morgan, Core City, Wells Fargo, whatever, right? Kicks off basically on Friday, right? Right. So that's gonna be interesting, right? So massive profit increases for the US companies helped fuel the 27% gain in the S&P 500 in 2021. Why? Because that was a year to start front running the banks. Now, more of it happened basically, I would say, just be honest. It started happening around the second quarter, in the first quarter, second quarter of 2021. That's when most people starting to kind of add more money to the banks. And it showed. You can see how stuff was starting to really show itself in terms of the inflow or rebalancing, right? Even though they're still buying tech and Google, but they start adding more allocation to their bank portfolio holdings because they know that the liftoff was becoming more relevant. The ideal of the tapering was becoming more of a reality that the Feds couldn't, downplay any longer, and they just start front running it. That's what happens when you become a more strategic investor. You get ahead of the data. In this case, it's useful because you know that there's going to be a changing of the guard. That's what makes people really good at learning how to move money thoroughly, right? You have to be a chess player in that perspective. So no secret, we talked about this stuff all last year. We talked about it coming out in 2020. So I like to say that a lot because I know we have gone over this stuff like religiously. We have. So it's not like it's new to us in a lot of ways. We just have to be more strategic in putting it and implementing, a strategy behind it. Right. So earnings for the S&P 500 companies are expected to jump 22.3%, according to Refinitiv data sites by Reuters, right? Cited by Reuters. A solid increase, but still a slower pace. See, they got to make sure they give you some kind of form of, we did good. We still got to jump at 22.3%. But yet it's still, still a slower pace than was seen in the first and second quarter and third quarters. See how that work? So that essentially, you talking about 3 quarters right there. You mean 3 quarters? They didn't say 1 or 2, they said 3, first, second, and third. See how they did that? So really, how much did you really grow if you slower in the pace of your growth in the first, second, and third quarters? See, that's that tricknology right there. See how they got you? That's that tricknology. Again, change my mind. Can't have it both ways, right? Can't have it both ways, right? So investors will be eager to hear about inflation. Key points right there. So you listen to the earning calls like I do. You want to hear about the ordeal dealing with inflation, supply chain issues, bottlenecks, et cetera, et cetera. Are they unwinding it? Is it getting better? Is it getting worse? because we know a lot of nations still over there in that eastern sector are still what? Backpedaling because of this COVID. It started to surge again. So they can't move products and goods. So that means it ain't no different over here in the West. Don't be confused about that when you hear that they're going back into lockdown, the slow, soft lockdowns, and they're slowing business up. That hurts America's business. Don't be confused by that. They will tell you one thing, but the reality of the numbers show a whole nother different thing. Just be cautious of it is my point. So whether companies believe the supply chain crunch that helped drive prices up last year will ease in the coming months and forecast for 2022. Again, they're trying to take into account for that now so they can try to price into the market, but they can't do it quite yet. Why? Because all these other issues surrounding markets are too big of a problem now. So they can just focus on, seeing if there's going to be any kind of natural organic growth to price into some of these high equity stocks that Wall Street loves to kind of chase, like Apple and those type Facebook. Some of them going to stand out and do good. Others going to be like, whoa, okay, yeah, you're going to have to take a little, a backseat for a moment. And that's just reality, right? So we're aware of that too. So we look forward to earnings coming out next week. So fourth, volatility to continue. So we know we love volatility. Why? Because that's when, if you're a day trader, that's where you make your money. You need expansion. You need stocks, stocks to move. You need them to open up, especially trade options, because that gives you a great opportunity to increase your delta, your intrinsic value when stocks are moving. Even when they may have high implied volatility, readouts, you still need them to actually play out that volatility, expansion of all the people that's buying these options, sitting in and waiting for them to break out. So when those things happen, or it actually unravels the way it should, that's when the day traders make a ton of money, because people, again, emotionally, they're compromised when they feel like they're losing money or sometimes making money, and they'll do what? They'll sell, inadvertently, or prematurely, or after the fact, and that's what's causing these markets to kind of, these stocks to move a little bit more than usual. They're expanding more, right? Their range of movement may be, maybe $2 on average on every day. Now they're opening up around about $5, $6, right? The movement between the top and the bottom. That's where day traders make their money. So you want to look into that, definitely going forward. That there still is even though it seemed like it was like less volume this past week, in terms of the market, there's still a moment to buy premium outright as opposed to just selling premium if you're an option trader. So just be cautious of that, or cognizant of that, not necessarily cautious, but cognizant of that, where you may still can find you some good bangs for your buck, and trading some of the option plays. All right. So indications that the Fed is ready to hike rates faster than previously anticipated as it combats surging inflation rolled markets into the first week of 2022, and that the volatility looks set to continue. That part right there. Volatility looks set to continue. That means expansion. Stocks finna move a little bit more than what Wall Street would like to have right now. And that's going to cause them to be, out of succinct to be able to put together a plan to price this stuff into the market. That's how they get on their back heels. And the average retail trader makes some of their gains during these moments. All right. So just be understanding that again, and let's play ball. All right. So last week we saw the Dow fall 0.3%. The S&P 500 declined 1.9%, and the NASDAQ dropped a 4.5%. That one there was really big. Why? Because that's all based on the tech sector. The NASDAQ dropping 4.5% was not by accident. That means they trimmed Apple, Google, Microsoft, the big boys, Amazon. All of them got trimmed down really bad. So those are not the security plays that most people will run to. Typically, when they normally would, they're not all running to those stocks now. They're actually selling. Who's selling? Not the retail. Retail mixed in there, but a lot of this is big money that's selling. Big money is taking profit basically at some of these high points on the market within some of these growth tech stocks. That has a lot to say with what's going on. Why? Because like we've been preaching ever since 2020, right? Watching that 10-year yield, that's going to be the indication that everybody needs to watch in terms of where we are in terms of interest rate value. And that hurts tech stocks that borrow cheap money under the Fed mandate. And now that punch bowl is being taken away. So a lot of those stocks now have to backpedal. Right. So while the 10-year benchmark, the 10-year yield soared to a 2-year high on Friday, and the outlook of the Fed rate hikes, basically starting to reveal themselves. This is the reason why basically the NASDAQ dropped 4.5%. Right. The sentiment turned negative. Jake Dollarhide, Chief Executive Officer of Longbow Asset Management in Tulsa, Oklahoma, told Reuters, right now the market is nervous and in the mood, right, to sell at the first hint of bad news. Y'all remember the last 2 years has been what? Good news, bad news is good news. Y'all remember y'all been hearing that for the last 2 years? Oh man, bad news is good for the market. Why? Because that means the Feds continuously need to keep pumping money. This is their excuse to pump more money into the system, right? Well, guess what? Not now. Change my mind, right? Again, change my mind. Facts. Change my mind. Why? Because people now see that as what? That's a form of risk that they're not willing to want to deal with. They don't want to deal with that risk. Equities now have to start to, assess, their situation or their industry value for us. Where's the money, best suited to be allocated to it? Not just because it's Apple, not just because they feel like they got a lot of cash on hand and they ain't really innovating over there. We know that. That's a whole nother discussion. We talked about it before. People want to go to places where they feel like they're still burgeoning and yet to really benefit a lot of off the money that should have came into the system equally, but we know that's not how markets work. But they're starting to get their ticket punch now. People find them value plays to have good dividends. Those value plays that were left oversold while everybody was partying and hanging out in the overpriced tech stocks. They finna take one side of the boat where everybody's sitting on and run to the other side now, little bit by little bit. And some people gonna sprint across the other side. So that's gonna be interesting too. Watching everybody moving to the higher inflow of some of these stocks that were sitting on the sideline, oversold, 52-week lows, waiting to get their chance to get into the game. And so it's not going to be hard to track them because you can easily go to bar chart and many other publications put in stocks that are 52-week lows, value stocks that are oversold. You can just put in anything in a Google query box and it'll start leading you to those kind of companies right now. Again, not rocket science. Not. Right? So moving on real quick. So investors have been rotating out of technology heavy growth shares and into more value oriented shares, right? Value oriented shares, so to speak, right? So which they think may do better in a high interest rate environment. Not rocket science. Again, we've been talking about that. No secret at this point. We talked about stocks that will have that kind of value of trajectory of growth in this year going forward, where some of these value stocks may could potentially even become growth stocks at some point. But for now, they're definitely finna get their chance to celebrate in the streets a little bit because of money rotation, rebalancing to a degree, right? So rising cases of the Omicron variant of the coronavirus are contributed to the risk-off mood in markets as well. So there you go. Again, people always trying to tell you that the virus is priced in. The threat of the viruses are priced into the market, bro. We know what to do now. We know that's a lie because the hospitals say different. The Supreme Court ruling that we're dealing with right now says different. The idea that people are not willing to just go back to work, even though they know there's a lot of jobs out there ready to be filled, that says different, right? You can track the value of the moods of the people or the citizens. That tells you a lot about whether or not Wall Street has the gall to say that it's priced into the market. They'll say anything to keep people invested in the market. Why? Because they benefit off that. We're just saying, understanding of that, be conscious of that, and make better decisions. All right. So lastly, Bitcoin. So Bitcoin has been under pressure, right? No secret there, right? So of course if we go to the Bitcoin chart live right now, just on GP, we know it's all over the place. We know it's trying to hold that $40,000 level. It's been at or around it, bouncing around. It's holding on for dear life, but it's okay. I've been talking about this stuff a lot lately. It's okay if it pulls back below it. All right. I know a lot of people don't want to hear that, but you know what? The worst thing happened when we figured out that Wall Street was using Bitcoin as correlation in terms of liquidity to help also, keep the energy of the stock market up as well, right? So where there was a divergence initially that it's a hedge against equity, right? Equity stocks. Then it turned around to being a converged correlation to equity markets because the stimulus money, and now that the stimulus money is gone, they're still trying to act like Bitcoin is reputable in their mind in terms of that of the same way as equity stocks. Before they just bashed it and downed it and saying it's rat poison squared, is pseudo, is this, that, and third. So you can't have it both ways. Again, you can't have it both ways, Wall Street. Change my mind. Right? Change my mind. So we dispelling all that, the foolishness that Wall Street would try to have you believe and getting you to understand that they cannot have it both ways. They will tell you that they can, but They can't. Trust me, guys. Don't let them fool you. They cannot. So yeah, it is, trending at around our support line. We drew this line a while back. We know that this is an area of interest. No secret here. Of course, you see what's going on at this point. If it breaks that point, of course, we talked about 40,000 being a benchmark point. Some people got low as 38,000. So as you see, it hit 40,000 several times. It bounced here several times, right? So, we kind of had to understand that, that was going to be a line in the sand. Obviously, again, it's not rocket science, right? It's not, right? So you bounced off that area several times, and, now you're just trying to save face. But keep in mind, if the equity markets tank this week when any of the bad news coming out, what you think going to happen to Bitcoin? Yeah, it's going to pull back more. Now, if it breaks that 40,000, then yeah, we want to look at these little areas here, because these are the areas of interest. Obviously, clearly, they're the most, common areas that you will look to next. You got a 200 moving average here crossing at this point here around 38,000. That's why some people are saying 38,000 is the next level. Why? Because that's where that 200 moving average converged here at this point of resistance that became a point of support at this point, even though it broke below it and got back above it, and then went higher. But nonetheless, that is an indication area of interest. So 38,000, if we break 40,000, that could be the next level potentially if you want to watch. Right? So just keeping that, in mind, or putting that out there, so to speak. Right? As a matter of fact, let me bring it down to 40,000 all the way down. Right? For my own edification. So we'll be ready to deal with that basis. My point. Hold up. Sorry, I got this thing up here. My bad, guys. My bad. Let me blow it up. So again, that's the area here. This is our area of interest here. We want to watch that between these two guidelines here, these training wheels, right? You want to watch in this area here. All right. So, and then a lot of this stuff is going to be, again, reflective of how the equity markets also participate either in bouncing this week or going lower, because we know the SP 500, is somewhat in trouble a little bit, right? A little bit. Why? Because we saw, especially on the daily, right? The daily chart definitely saw us, breaking below the 20-day moving average, right? Clearly here, right? Within this kind of downward slope, we saw the resistance up here. Of course, we know that there's resistance is definitely there. Not that we can't bounce, but we know that's the new resistance here, basically sitting around about 468, right? Because that's where the 20-day moving average is crossing at, right? That's where it's kind of leveling out at. Not rocket science there, right? Not rocket science there. So on the hourly chart, it looks even more, right, insidious. Why? Because we lost the 200-day moving average. On the hourly chart, we lost the 200-day moving average, which is this thick yellow line. That's a major marquee indicator there, right? Now, this is on the hourly chart, of course, not the daily. Right? The daily is down to maybe 430 something, the 200 moving average on the daily chart. But on the hourly, a lot of people also trade around the hourly because of options and this, that, and the third. We're below it. We broke below it. We couldn't hold it. And now we're trending here ever so slightly. We filled that gap there. Right. We got a descending wedge, coming down to at least around about 462 area, somewhere around there, give or take at the end of the week, maybe around 460. Right. We also have still gaps, that can get filled. Right. We got a 454 down there. We got a lot of, liquidity that could be tested, if it gets to that point. Of course, if with the fifth, we all be drunk, but that's how you assess your analysis and look at everything. You don't be one-track minded. You don't have biases because you want your position to win and not look at all the potential danger out there as well. That's not how investing and trading works. So we want to look at the good, the bad, and the ugly. So on the hourly chart, we have lost the 20-day moving average. We have a descending 20-day moving average that's coming down faster than usual too. So that can get ugly. Meaning if that 20-day moving average crossed below the 200-day moving average on the hourly chart, woo, Gina, right? That could be a woo Gina moment right there. You don't want that to happen. So you best believe Wall Street going to do everything in their power to try to fight that. So at the bottom of the linear regression band, we still have an area of 464 of support to be tested. If not, or seeing if it's going to hold, if it come down there and test it. Because if it blow past that, then yeah, we definitely can get, it can get ugly. And we could probably even see 458. Right, we can come down there and probably see even 458 area. So we're gonna keep an eye on that. So the snapback will be obviously getting back up to 468, and then maybe up towards 469, 470. Why? Because that's the chatter area up here that could be, tested again to try to get back into a form of trying to round it out this selling a little bit, and see if they can get back on course to maybe go back and test some of these candles eat some of that, that liquidity back up and go test that all-time high at some point, but those are your obvious levels, right? 200 moving average, 20-day moving average, and then you start looking at the bigger candles above that, right? Stretches of that, right? And then everything over here as well, the micro manage that position in between, right? And filling up those old bearish and engulfing candles here. All right. So just keep that in mind as well, right? Nothing that you guys aren't prepared for, but we're going to speak about it, all right? So that's what we do. And all this stuff is applies, across the different assets that you may be in, individual stocks, because if they are highly correlated to the S&P 500, then chances are they're going to be, trading just like the S&P 500. If it's pulling back, they're going to be pulling back too, right? That's just how this stuff works. I don't make the rules, some, not all, but some, right? Depends if they got individual news or not, but that's how this stuff works. All right, so going back to Bitcoin. So Bitcoin under pressure since the start of the new year, falling to the lowest level since late September amid a broader sell-off in the cryptocurrencies, driven by, there we go, concerns over a prospect of a more hawkish Fed. So somebody tell me, when did the Federal Reserve start regulating cryptocurrency? Or even Bitcoin? Anybody? When did the Fed take control of a decentralized platform, and now everything the Fed do controls it? Why? Because they feel like the stimulus money that Wall Street used to make the case that this helps Wall Street too. That's how greedy they are at Wall Street. They made Bitcoin their red-headed stepchild. And the real Bitcoin bulls out there like, bro, we don't want to be attached to y'all. But when the news got wind of it, they made it the likeness of it as well. And now people are following it as a correlation to the equity markets. Could make this stuff up. Me on the other end, changed my mind. I realized that the hustle was in. I start like, whoa. Let me look at this a little different. Changed my mind. Not gonna get me. Can't have it both ways. Right? You're not gonna get me. Right? So I'm understanding that. So it's gonna be just like you got to pick better stocks this year. You got to pick better cryptocurrencies this year. True story. So ain't no different on that side. Got the altcoins and different ones out there like that. Again, you got to be conscious of that, guys. You got to. I have my little few that I'm still, excited about. Of course, ain't no secret. This is not investment advice, but y'all know I look at Mana, some of these metaverse ones. That's just the hype values, maybe whatever. NFT ones, Sand, right? XYO, Smurf for real estate, right? Metaverse real estate, that stuff is popping right now, going through the roof. LRC, right? Nothing new there.
I will say on Bitcoin though, for those of us that's been in Bitcoin since like 3,000, you essentially have nothing to worry about. You are still
Facts.
in the money. Like you are
Facts.
still up so much money. So this is not panic for you. Anybody that doesn't have Bitcoin that's trying to buy now, be careful. Just
Facts.
be careful.
All facts. And that's what we tell people about, timing is everything. Entries are everything, right? First impressions, right? Think about that. If you're going on a date for the first time, you don't want to show up looking all any kind of way, acting any kind of way, right? You had your best representative with you. So you realize that even with the entry values of how you present your money, right? You don't want to send your money out there, right? All unprepared, informed and none of that stuff like that. And think about it's just gonna go out there and just win just because it's your money. Like, where do people get that mindset from? Right? It's my money. It's better. No, if it don't work out, it's a scam, or it's bad. It's everybody's fault except their fault. Is that how that work? So that's why I say, we are in the age of welcoming of financial literacy as a whole now, where it's the new, it's the new swag, right? Figuring out how to better protect yourself financially is the new swag. And for those who because people have different walks, like, man, the education, non-education. Look, you can learn this stuff right here again in your free time. You don't need a degree to learn this too. So yeah, you can walk around with a different mindset when you're able to make your own money and not be, have somebody over you like a Mr. Charlie, but you have to still play by the same rules of engagement like everybody. You got to study, you got to understand it, you got to put in that work to get better notified and better knowledge, period. You can't have it both ways too. You can't even have it both ways. Change my mind, right? You can't have it both ways in that regard too. So you're going to have to put in the work and research and study and do your due diligence and be disciplined about it, right? No secret there, right? So we're ready for it one way or the other, but we want to make sure we always keep people honest, and we're not going to have all this sanguine euphoria all the time. Sometimes we got to be a little phlegmatic about this stuff. Let's go, right? So again, let's going back to the thing right here, to the Bitcoin breakdown here. So again, as you also see within this publication, excuse me, it says right, the world's largest cryptocurrency by market value has fallen over 40% since the hitting of its all-time high, of 69,000. Of course, that's Bitcoin. So in November, driven by lower expectations that the U.S. central banks will hike interest rates sooner than expected. See, that's that. I hate that. That's that symbiotic moment there when they made Bitcoin correlated to the equity markets. And I was sitting there watching too, basically all throughout 2021. They just kept trying to push that narrative. Yeah, I was like, here they go. We talked about it before, but it's just weird now watching it happen. But we get it. All right. So more aggressive policy action by the Fed will sap investors' appetite for riskier asset, because they look at Bitcoin as a riskier asset, obviously, right? It's decentralized, it's not relegated like the way that Wall Street would like it to be, but yet Wall Street also wants to participate in it too, right? Can't have it both ways. Change my mind. All right, so we're seeing broad risk sentiment across all markets currently, as inflationary concerns and rate hikes appear to be at the forefront of speculators' mind. Well, again, if you are a day trader or swing trader, or a dividend-based investor, or we are more concerned, called the speculators, right? As opposed to long-term investors like a Warren Buffett or like that. So we're playing within these moments of volatility swings to try to catch the peak or the trough to utilize that expansion value to make money. So we're seeing that even in Bitcoin. So again, like Open Chris was saying, if you've been in a lot earlier, you need not panic. You need to realize how drawdowns work in that same regard too. You get a chance to dollar cost average in at what? Better pricing potential based upon all the need of the selling that needs to happen on the equity side. So yeah, don't get too premature. Don't get too ahead of yourself. Let it happen. Because at some point you get to add more fuel to the potential fire that it can potentially be a great opportunity later down the road. You still have to have your own risk management thesis in play, not mine, your own, but still realize those are the rules of engagement that we all follow. Because the map, again, as we say, investing and trading is not an exact science. It's not an exact science. You have to realize that, right? Yet we're using strategy, we're using math, we're using a lot of different, formulas to come up with our thesis, but we realize the nature of the risk aspect of this as well. So we're conscious of that, and we're just making very prudent decisions. Right. So it's important just to make sure we understand that. So it says liquidity in the BTC, or in basically Bitcoin, has been quite thin on both sides, sellers and buyers, basically saying. And there is a risk of a retreat back to the mid 30s on the short-term horizon, essentially. So we talked about that again, breaking that 40,000 bar. Of course, maybe testing the 38,000, that'd be the first level we want to look at. After that, then of course y'all can go look at the chart. I'm sure y'all already put this stuff in perspective, and you'll know the next level to look at on it. What? On a check down bar or a check down menu to look at, to make sure that you're not too premature again and too late in the same breath in case a bounce does come. Right. But nonetheless, if you got a long-term thesis in this asset class, you're already knowing that you're still up a ton from where it came from. I mean, clearly you can see the double top in this perspective. It's not hard here. Let me share the chart. Sorry about that. Forgive me, family. Right. Let me get this over here. But, it's not hard to see that, right? Because we talked about this before, and we're going to continue to talk about it. It ain't hard to see what's going on here. I mean, look at your peaks there, right? You see that little area there of resistance, right? And the equity market's kind of playing in that same likeness, the way it looks like that too a little bit. Look down here, this blue line down here at the bottom. This is a comparative chart to the to that of what Bitcoin, right? S&P 500 down here, kind of looks like that a little bit of what Bitcoin looks like up here at this point here, riding high, pulling back a little bit, even though equity markets tried to make another little bang here up higher, and now it's starting to pull back, and it seems like this kind of just downtrended more from that point. But still at these points in terms of if equity markets pull back lower here in terms of equities, this point of here of the support, which is a little bit lower than where equities would probably be more of a an area of interest you might want to watch, because after that, this hash line down here, this hash marks down here, right? This dotted line down here, that's 28,000, right? So if the 200 moving average on this point, goes around 38,000, then this liquidity here, these little, it's marching candles over here, those could be the next areas to kind of try to work to take out if they, if it begins to just pull back. But even at that point of 30,000, it's still up a lot higher. At the point where we were, again, way back here. We've been way back here, right? We've been way back here, right? We've been way back here. We can go on and on and on and on, but going back as far as like $1,700, a token, right? $2,100 a token, where it all began, especially for myself, for transparency, of course. I'm looking at this like, okay, yeah, this is good, even though it sucks to see any asset pullback if you're in it. But you say to yourself, if you have the understanding that this asset still has a lot to prove, per se, that's your own thesis you have to account for, not mine, your own. Then you say to yourself, these are dollar cost averaging moments. Again, you don't have to buy a whole Bitcoin anyway. You can buy fractions of it, but pullbacks are healthy, is my point. Pullbacks are natural and they're healthy. To get people to understand that in this day and age, it's like pulling teeth. Why? Because they got too spoiled, too lazy, and too comfortable under Jerome Powell printing all this money. And now that that's probably going to go away a little bit, now they got to realize how to go back to being disciplined traders. They're scared of that across a lot of different asset classes, not just Bitcoin, Forex market too. Forex traders know that too. The different currency pairs, that's on the chopping block too. Some of them are not immune to get up in it as well. Look at Turkey, right? Look at the Turkish lira, right? That's one of the latest victims, right? That's getting throttled right now, right? Their currency is, getting washed. All right. So, yeah, the global markets as a whole, you have to realize, how to play ball, when to fold and when to hold them. Right. And when just to kind of just, remove all the fear, uncertainty, and doubt, and just sit somewhere quiet, right? And do your yoga thing, right? Tap on the universe, right? Right. So, yeah, either way, right? Either way, we're ready. All right. So let's finish up the article here. Then we get ready to get off here. All right. So yeah, Bitcoin is on the chopping block a little bit, and that's fine. And again, nothing to be all, acting like the sky's falling like chicken little. Just realize that's how markets work. So Bitcoin was under pressure. Bitcoin was under pressure lower. Was also pressured lower as global computing power of its network dropped sharply last week following the shutdown of the Kazakhstan's internet during an uprising. That was important. I don't know if y'all caught that or not. And that actually still happening this weekend, right? This whole issue with Kazakhstan, right? They over there they fighting, and Russia trying to intervene. Russia trying to threaten Ukraine. They got all kind of problems over there. We just talked about that. So if they readers are starting to be unstable, well, what does that have to do with their, what is that going to do for us? How American markets also assess some of those economies in terms of they feed off them as well. That means their markets are being disrupted because they have to deal with what? Conflicts on the ground. Those are other issues. Not that we just take a whole lot out of Kazakhstan, right? Now that we import a lot from Kazakhstan, maybe some yak milk, maybe, I don't know. I'm just cutting up. Get you a little yak milk from Kazakhstan. But nonetheless, all that stuff does influence the greater European market too, because they got to make sure they keep their sectors under watch and under control. But Europe know that they can't control Russia. They can't control Putin, right? So Putin out there like, bro, we're going to do what we do. We're going to, instigate stuff when we can, and we're going to fight when we want to. It's a mess. But all that stuff does have something to do with what? A lot of these other asset classes, as you see in this perspective, it says their computing power network dropped following the shutdown of Kazakhstan internet during the uprising. So apparently some kind of servers in Kazakhstan or something. I don't know. I had to look into that a little bit more, right? But that also caused Bitcoin to have a problem as well, where the network was all jacked up a little bit, right? Because the mining industry, obviously, right? They have a lot of miners in Kazakhstan, right? Because those are the ones who producing the Bitcoin, right? Producing, the hash rates and the terahash and all that stuff, right? To keep the, that's the computing power behind. Same way, like, if you got an electrical battery, the cells within that, regardless of that, keeping them, up and running properly or strong. These miners are very useful in that perspective of keeping the Bitcoin blockchain up and running, because they have to fuel it through that, through the value of it, right? So something to look at as well. Again, one of many things that we can say that also added a little fuel to the fire of Bitcoin, pulling back a little bit. Beyond the correlation of the equity markets, nothing new here. It's just good old-fashioned profit taking, right? To put it in layman terms, it's good old-fashioned profit taking after an amazing run over the last near 2 years, and now that a lot of the liquidity is starting to dry up, meaning the stimulus money that came along, with the federal government well, the Congress giving out money to help people during COVID. Now that is dried up a little bit. People got to figure out what do we do now? Do we take profit? Do we sit and hodl, right? And let it kind of come down a little bit before the next big boom cycle or whatever. But nonetheless, you still up a lot, So again, put context to it. Look at this chart, right? So when people talk that trash, like, oh man, see, it's going selling off, and this and this done, it's going to zero. You still show them charts like this right here, right? This is it, inception. This is where it went, in that time. So 2015, in this perspective, in this readout, to 2021. So we talk about a 6-year window, right? Well, 2022 at this point, right? So we'll just say 6-year window. You're talking about, $100 a plus a token, give or take, right? $200 plus a token to over this to near 70,000. Like, put that together in terms of a 10-year investment thesis, like Warren Buffett says. So couple hundred bucks for a token, a lot less, of course, in a lot of cases, right? And before they start doing all the halvings and all that stuff, right? Same way they do like stock splits and all that stuff like that. That's what that would be equivalent to, basically. But all the way up to 70,000 in about 6 years. Like, if you just bought one token back then, at the peak, it would have been worth $69,000 in 6 years. So basically, $100, a couple $100 turned into $69,000 in 6 years. Yeah, you don't want to learn about this asset class? Okay, change my mind. All right, what's going on, family? Contrarian Think in the building. I see you in the building. All right, then pop up in the house. Shout out to you. Our brother, everything in the building as well. Shout out to you. Peace, power, profit to you as well. All right, see some of the family coming in. I'm just looking at the back chat finally. Sorry. Shout out to you as well, family. So yeah. So when people tell you that, yeah, it's this and it's that, yeah, okay, whatever. Right. Number one, numbers don't lie. Look at the bigger picture. Give me a doom and gloom case to tell me 100% that the federal government and anybody that's regulated is going to take it to zero. Then yeah, you'll have my attention of caution. But until then, I just do like everybody else. I understand the rules of engagement. I move in excess to the aspect of the information that's making me stay, invested in it. Right? That's just how this stuff works, right? You have to realize that you don't abandon your business in the middle of making money just because you have one problem on the assembly line. You don't just walk out of the building that day. So I'm done, right? Y'all get the point, right? So we're prepared. We're not worried, and we look forward to finding those companies that are going to be highly liquid in terms of their rotational value going forward. Why? Because that's how this stuff works. Again, we're excited for it. Whatever, right? We're ready. Right? We're ready for it. Right? We're positioned for it too, in a way to capitalize off these moments when they began to kind of let all the smoke settle, let all the dust settle, and then let's see what's out there. Then we say, okay, I can spend a little bit here, I can spend a little bit there, I can, look to buy a leap here, I can look to, take some profit in this one, and all of it works out in the end. Right? All of it works out in the end. All right. So that being said, guys, that's it. So that's all I got for you guys. We got the future market getting ready to open up here in the next literally 9 minutes. Right. We took this thing all the way to the future market here. We're gonna see how the future market gonna open up because there's a lot of pressure on the futures market. There's a lot of pressure on it because of how the market closed out last week, right? And people want to know all this news that we got over the weekend, be a lot of bad to ambiguous news. It may offer up a good opportunity now to start figuring out how to better find some good trades or some setups, at least to look at some better setups going forward. Make sense? All right, guys. So that's all I got. So unless the panel got anything else before we get out of here, guys, we're gonna end on that note, and we're gonna get our little popcorn, right? Your little vegan popcorn, and we're gonna watch the future market like it's a football show, right? Let's see them fumble money around here before the market opens up. Obviously, of course, Monday. So we'll be prepared for it. All right. So that's it. So again, thank you everybody on the YouTube side for tuning in. Thank you for your patronage as always. Again, everybody that watched this on Twitter, everybody that watched this on Facebook, we appreciate your patronage as always as well. Don't hesitate to come, join the panel when we are live. When you see the link, come join us, man. Don't be afraid. We're family over here. We talk in that instance for a reason, that energy for a reason, to make sure that everybody's welcome, even young children, right? Young kids, young adults. Because again, we keep this thing PG rated for a reason. We're here to learn information to help us monetarily, right? So yeah, we welcome everybody. We want to make sure everybody get excited about learning to be more cognizant of how to use the financial markets to their benefit too. All right, so we're excited for that. So don't hesitate, like, share, subscribe. All right, definitely if you're new, definitely go ahead and subscribe. When we go live, again, you're welcome here, and you're welcome to come on and speak as well, and sharing the love of this information like we do as well. All right. So with that being said, guys, we're gonna get on out of here like we always do in good fashion, right? We got a couple little tunes we're gonna bump out. So we appreciate your visit. If you want to contribute to the channel, y'all know I got my little Cash App down there. All right, we bring the content. If you like it, you love it, show a little love, throw a couple bucks on it. We appreciate you. So Cash App, African Emporium. If you want to do that, if not, just continuously work hard to learn this information that we're providing, and then so you can utilize the benefits of your situation one way or the other, right? So we appreciate you guys, right? So going into this week, we already up against a lot of different news that could definitely get the markets unstable again. So I guess the first video to kind of open up with is what? The one that we talked about a while back when we got that first bad information coming out of last week, right? In terms of dealing with the inflation, right? The beautiful catastrophe that we know that the Feds have been able to produce and making wealthy people more rich. Maybe it's time, to flip script on that, and us, the retail traders, can get some of that money, right? Well, that's what we're hoping for, right? So with that being said, guys, shout out to everybody. Thank y'all for tuning in, and we appreciate your visit.
Everything is twofold. What's joy is pain on the other hand. And what happens when the one that you love is the main cause of your suffering? I need you like I need air to breathe. I need you to save me from me. I'm caught in your wave, I'm drifting away. I need you to save me. Please don't let me drown. 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 Whoa. Give me all of your lies, 'cause you're my demon in disguise. I learned to love the cage you keep me in, but the walls keep closing in, and I don't wanna die. But your poison feels so right. Why do I want you when you're bad for me? My perfect storm, my beautiful catastrophe. My perfect storm, my beautiful catastrophe. I'm drowning with all of this darkness surrounding. You need me like you need air to breathe. You want me to save you from me. I know that you're trapped inside this wave. Who's gonna save you? Who's gonna save you from me? I can't see you drown. 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 Whoa. Give me all of your lies, 'cause you're my demon in disguise. I learned to love the cage you keep me in, but the walls keep closing in, and I don't wanna die. But your poison feels so right. Why do I want you when you're bad for me? My perfect storm, my beautiful catastrophe. My perfect storm, my beautiful catastrophe. It's a toxic addiction. You're a guilty affliction. Yeah. I can't breathe. I need to get some air, but it's a toxic addiction. You're a guilty affliction. Yeah. You can't breathe and you just need some air. Yeah. Give me all of your lies, 'cause you're my demon in disguise. I learned to love the cage you keep me in, but the walls keep closing in, and I don't wanna die. But your poison feels so right. Why do I want you when you're bad for me? My perfect storm, my beautiful
I'm starting to lock up a little bit over here, man. Running all these different servers, right? All these servers going. All right. So yeah, moving on to the next one real quick here, guys. Vibes.
Yeah. Ow! Yeah. Y'all think too small, I got big dreams. You just starting, I'm way ahead at the end scenes. Started reading and dodging all of the quick schemes. Money like your Spotify, boy, I got 10 streams. And I'm still looking for more. My people, they got a soar. I'm putting that on the Lord. Ain't accepting, ignore. Just kicking down all the doors. Guarantee you, boy, if I ask for it, it's gotta be real big. I gotta make it just for my kids. And for their kids, it's kids. That's wealth, years and years. Promise my brother soon as he out and finish this bid, we finna do it bigger than anybody ever did. The odds is real big. Jobs that's real big. Satan trying a little, my God is real big. Stayed up on the grind on the cars is real big. I gotta do it big. The only way that I can live. And I promise I'm trying to. Before you count me out, homie, let me remind you. They was blocking the shine, now I think it's my time to. Counting them dollar signs like lights, they'll blind you. Let me rewind to. Back when I was broken, I couldn't acquire 2 cents. And now I got 2 wrists. They was sleeping on me, homie, must have got too big. Call my phone, I be like, who this? Damn right, hell yeah, I'm brand new. Smell like can too. I'm fresh forever like canned food. Try and tell me what I can't do. I wanna see the world, my vision on Shamu. That mean I got goals that's real big, foes that's real big. Your offer too little, sorry, my soul is real big. Coming into the ring with blows that's real big. I gotta do it big, that's the only way I can live. I gotta do it big. I gotta do it big. I gotta do it big. Gotta do it big, that's the only way to live. Gotta do it big. I gotta do it big. I Gotta do it big, gotta do it big. That's the only way to live. Come on. Yeah, come on.
The bar raising, we keep moving it up. Ain't no surprises here, they knew it was us. Apologies if I was doing too much, but I always came through in the clutch. I got faith restored, why you pushing the brakes? I ain't full of myself, boy, I'm full of mistakes. I came from humble and roots, I'm here to stand and deliver. Had no one gassing me up, except the man in the mirror. I used to work on my handles, and now it's handles of liquor. I write these songs in a dark room, the candle will flicker. I stay practicing heavy, for when the game's on the line. It's like over and over, I run the plays in my mind. I'm a psycho, I'm taking my time. Rushing perfection is a dangerous crime. You gotta give it and take it. That's what you do till you make it. I had to roll with the punches and take the hits from the flagrants. I'm saying the bar raising, we keep moving it up. And no surprises here, they knew it was us. Apologies if I was doing too much, but I always came through in the clutch. An off game don't mean I'm losing my touch. And no excuses, I ain't using a crutch. Apologies if I was doing too much, but I always came through in the clutch. I was falling, had me stalling. I was way down, now I'm balling. I done came up, and I called it. I done came in the clutch with the game on the line, I know. I operate from a higher place. Wait, some decisions don't dry erase. I'm doing what I can to fuel the flame like a fireplace. To make a bunch of money, buy my mama a fireplace. We make incredible songs to celebrate and get mad lit. Once upon a time in Hollywood, I'm like Brad Pitt. My homies say I live a life, yeah, just a tad bit. Learning how to move in this rap shit. I told them that the bar raising, we keep moving it up. And no surprises here, they knew it was us. Apologies if I was doing too much, but I always came through in the clutch. An off game don't mean I'm losing my touch. And no excuses, I ain't using a crutch. Apologies if I was doing too much, but I always came through in the clutch. I was way down, now I'm balling. I done came up, and I called it. I done came in the clutch with the game on the line, I know.
All right, guys, that's it. So I'm gonna get on out of here, guys. Thank y'all for tuning in. Peace, power, and profit. Again, don't forget to like, share, and subscribe. We look forward to having you guys on the next bill. Tune in. Hold on, I got my echo going. I got my monitors on here in my office. Anyway, so that's it. So I will do this real quick on the way out, like we always do, right? So let's do a little quick screen share of what the futures market look like since we made it all the way to the futures market opened up. Let's see what people thinking about the market right now in the futures, that is, right? As of now, yeah, it's a woodshed moment still. Continuation is still happening. We got tick down, basically 0.22%, 21%. The US 500, which is the SP 500, down, 0.21, and the US 30, which is the Dow, down 0.15. Again, this is 7 minutes into the futures market. We're starting to see some weakness here in the small cap, of course. Small cap Russell here is down 0.58%. So yeah, it's starting to look, typical continuation coming out of a market that sold off Friday. If the algo is going to come to work, at some point, it will be definitely between the hours of maybe 7, 8 to 9, because the Asian market still, got to account for some kind of energy. The Japanese market, the Nikkei, and then the Hang Seng, the Chinese market when it opens up, of course. And after that, the London session or the England market, of course, getting around after that 12 a.m. hour, 2 a.m. hour. We'll see if there's any kind of change of sentiment in their, neck of the woods. But as of now, you start to see here that there's still a lot of weakness of sellers out there. even in the future session, which is not hard to really move the futures market. It doesn't take a whole lot of money to move the futures market. People fail to realize that. But it's one of those things that how they kind of perm the markets to get ready for typical sessions when they feel like they're going to take the market in a certain direction. They'll use the future market to jumpstart that. But as of now, you see what's happening here. Future markets are getting beat up here. The 10-year yield is retreating a little bit, not much, but only down 0.20%. That could change easily and flip. And then we can bounce off a level of support, maybe 174, 17, even 1723 area, and go back up to 1.8 area and not higher. So we'll be watching 10-year yield definitely going into tomorrow. As well as that, the commodity market is starting to show a little weakness too. Oil is down 0.22%. Same with Brent and the WTI. That is, natural gas is up. Obviously, it's cold. So natural gas is needed, and also this whole issue with European markets trying to needing natural gas, and the whole issue with Russia want to supply them and American markets want to supply them. That's a conflict, but we're dealing with our own cold blizzard over here in the States, so that's another issue. Anyway, gold down slightly here, about 0.11%, not much. That could easily rebound. Silver's up actually, so silver up, copper is slightly down. Of course, we ain't got to get into deep in the commodity market, soybeans, all that, but you see what's going on as far as precious metals and oil. And then crypto trying to bounce a little bit. It tried to, and then it's pulling back slightly here. We'll see how long it lasts. Rather now, a lot of these crypto currencies are green because they would just do for a bounce. How far they bounce from here, that's to be determined, right? And especially if they're going to trade in correlation, like we just talked about earlier, in relation to that of the equity market. So you can't have it both ways. Again, at some point they're gonna have to diverge away from equity markets, right? And that's a good thing. I always say that, man. They need to diverge, and let's keep it that way. Let people, invest in crypto under their own merit and not trying to tie it to the equity markets, even though institutions want in to a degree, but they also trying to play it both ways too. Again, you can't have it both ways. Change my mind. Right. So that's the future markets now. So we'll keep an eye on that going into later to this night session, and definitely well until tomorrow. We'll see how that all pans out. And as of now, of course, if you bought puts, swinging them into next week, you feeling good about yourself, right? It's just a feeling, right? Because you can't cash money that you can't cash out quite yet. So, but as of now, it feels good. If you got some puts, I got me a few of them out there, and I got some calls, so I'm hedged on both sides, like I always do. Right. So we'll see, which side, win that tug of war tomorrow is the side I'll be more conscious about. And I'll, take profit in one and pull the plug on the other one. Right. So we'll see how it all unfolds. All right. So that's it, guys. That's all I got, guys. Thank y'all for tuning in once again. Don't hesitate, hit me up if you got questions. Hit me up on my Facebook business page, African Emporium. I can help you out with any kind of, information you need for as publications, books, this, that, the third. Hey, what's going on, Billy Black? Yeah, hey, you see me on Weeboy. Shout out to you, Peace Bound Profit, bro. Yeah, definitely check me out over here too as well, man. I got my own little channel, been had it for a little minute. So it's good to see the family coming from that side of the building too. So shout out to the family, Billy Black in the building, right? Yeah, check me out, man. I look forward to seeing you back on the on that Weeboy side of things too, right? Because we try to add some commentary over there when we can. Right, we know those sites like that could be like the peanut gallery in some cases, but sometimes you get some good information over there as well. Right, so shout out to the Weeble, chat lines and all that stuff, even like stock twits and all that stuff as well. All right, so that being said, guys, I'm out, guys. Enjoy the rest of your evening. Be safe, be whole, right, and be well, right. So Shim Hotep, everybody. Shim Hotep.